Assalamu alaikum. Welcome to lecture 11 of AAA, and this is the continuation of lecture 10. So if you want to understand this lecture, you need the foundation of planning, materiality, and the risk of material misstatement, which comes from the previous lecture, that is lecture 10. So before you watch this video, please go and check my previous lecture, which is lecture 10, because there I've explained you the concept of what is material misstatement, what is risk, how do you plan the audit approach and all. In this lecture, this is not a lecture actually, we are going to do questions. Okay, question and answer. There will be 4 questions and each will be testing on audit risk, business risk, audit approach, and finally the risk of material misstatement. Please understand this question, especially the material misstatement topic, is going to cover the major part of your AAA exam and which is going to carry heavy marks. That's why there's a separate video on this just covering questions and answer. Okay. And the good thing is, once you know the format, how to answer one question, you can just replicate into your other questions because it's same. The only thing is the company changes, some facts changes, that's it. And maybe the number changes. Everything else remains the same. You need to be very consistent in your answering, how you answer. So I'm going to take you through 4 questions, how to answer I'm going to solve the questions in front of you to show you a demo how to answer this and with some tips and techniques. Okay, how to answer a question, how do you start a question, what you should do, how calculation should be done, how do you present your answer. Presentation is very important, and how to get the professional marks as well, very important. Professional marks is going to be covered in this question, your professional skill marks. Okay, so this is test your understanding 1, Yes company. This question is for 20 marks. Okay, so in every audit questions, if you have seen your past paper or even your revision kit questions, you must have noticed that all the questions will give you some scenarios. This first 5 to 6 lines is just a scenario setting the scene, what the company is into, what is your role, what time you're planning the audit. That's it. Next, you will be always presented the information in different exhibits. So when you're answering requirement, you need to use exhibits. You need to use each exhibit. Since we'll be doing this on a CB platform, I will definitely do a question on CB platform when I come to question and answer. Because now since I'm in the lecture part, still I haven't finished the AAA syllabus. So I'll be doing it manually on my OneNote. But once I finish the lecture, I'll be shifting to CB platform. So since you'll be doing this question on a CB platform, like any question, you must have noticed that exhibits are in different windows. You need to open the different windows there. Okay. So now here you have 2 exhibits. Okay, in this question. And the marks are shown. How much marks is allocated for the different requirements is shown below. Okay. So now every question starts like this. So this saves your time. Once you have set the pattern of a question of AAA in your mind, you subconsciously your mind will pick up. Once you read a new question, every time you read, you know, okay, this is how. You'll be given some scenario, you'll be given the exhibits, the requirement, the marks, professional skill marks, and you know this is the format. And especially this question comes in your question number 1 in your AAA for 50 marks. And also you have to write it in a certain format. Briefing note. Most of the time it's a briefing note. So through this question, you will also understand how to write a briefing note, which is very important. Very important. Okay, I've repeated 2 times to show you the importance of it. I want to emphasize it. The format is equally important as what you write. So it's just not what you write, but how you present your answer carries marks. Okay, so now this company, okay, you are audit manager. Most of the time you are an audit manager. You will see this. You need your role, who you are. You are an audit manager. Okay, for a year company you are going to audit. This is a new audit client. Very important is you need to notice is whether it's a new audit client or an existing audit client. This is very important. because something changes. When it's a new audit client, there will be some additional risk compared to existing audit client. Okay, this client is in the National Haulage and Distribution Company, over 2,000 employees. Okay, so they provide refrigerated, bulk and heavy haulage transport services to the time sensitive delivery schedule. And this is for 30th June 2005 you have to audit. Financial year end is this. So in the first exhibit, you have an email that you have received from the audit engagement partner. You have to report to him. And in exhibit 2, you are given the draft financial information. So now you have to respond to that email. Okay, let's see. And this is for 25 marks. Why? 20 marks is your technical, 5 marks is your professional skill marks. So in this professional skill marks, one is communication. Communication means are you following the format? Analysis, you have to analyze. You have to use all the exhibits. Evaluation, how you show both the sides, the positive and the negative. And then the professional skepticism. Are you challenging the opinion of the management? Okay. And commercial acumen. You should have an understanding of the industry also, a little bit, which will help you. Okay. Now, but they didn't tell you how each professional skill marks will be awarded. Okay. Now, so this is how you'll be presented. You'll be given exhibit 1. Usually it's an email. Most of the time you'll get an email only from a partner. Okay. You see it's 12 marks. Next, requirement B, 4 marks and 4 marks. That adds up to 20 marks. Okay. In the first one, okay, in the first one, what you should do? You should evaluate the risk of material misstatement for 12 marks. So this itself shows you, this gives you an idea on how many risks you have to write. Evaluate the risk means first identify the risk, then explain the risk. I'm going to take you through the answer. Like I'm going to write the answer. I'm going to show you how do you evaluate risk. Once you understood this, no matter any question comes on evaluation of risk or material misstatement, you can always answer. You can always use this as your supporting tool. Okay, because it's always consistent. There's a pattern always. Follow the consistency. Keep consistency in your answer. It becomes very easy. You don't even have to memorize the answer. Okay. Second is design an audit procedure for leases and for restructuring provision. 4 marks each. So that means when you're writing the audit procedure, 4 audit procedure for this, 4 audit procedure for this. Okay. Now we'll read the exhibits. Exhibit 2, it's easy. Why? Because it's the draft financial statement. You are given the statement of profit and loss. And you see for revenue and operating expenses, we have notes. You have to go through those notes. Okay. Now, statement of financial position you are given. Intangible, tangible has another note. Then we have inventory, trade receivable, cash equivalent. Provision, lease liability has another requirement. Note, sorry. Okay. So now, wait. Exhibit 1 is not over. This was exhibit 2. Yeah, so exhibit 1 is this email. It is basically telling you to do the audit. Okay. So now, you have been given. Now let's read the note. Note 1 is regarding revenue. You see, just see here what's happening to revenue. See, you can see that revenue is increasing. You see, there's an increment in revenue from 2004 to 2005. This is just an estimation. Please understand, it's a draft. It's not a final. Okay, this is actual. So let's see. Note 1 will read. So if you see the revenue, it's a net of rebate to major customer. Okay, and this rebate increases with the volume of consignment transporter. The more the consignment transporter, more will be the rebate. Can you understand? So rebates are calculated. How rebates are calculated? On cumulative sales for the financial year end and awarded quarterly in arrears. This rebates due are paid. Rebate dues to be paid are included in liability under note 5. Okay. Come into note to operating expenses. They will give you the total. Under the note, what happens is they give you the breakdown. If you see a financial statement, your profit and loss, you will see this total. But how they got that total is shown under the note. You see, material expense, staff cost, depreciation, and other expenses. Okay. Regarding material expense, they have given a note. Fuel, Please understand what type of business it is. It is in the transportation industry. So this will be material expenses. Obviously, fuel, repair materials, transportation, and vehicle maintenance cost. Obviously, these are material. It's understood. But if it was some other industry, let's say this industry is into audit, into service industry, then this cost will not be material. Fuel, transportation. It changes from industry to industry. What is your material expense? Okay. Note 3 is intangible asset. Okay, regarding intangible asset, they have purchased intangible asset like software and industrial license, and they have used cost model. That's fine. But regarding internally generated intangible assets, okay, they are saying that means the software that they are developing for customers to generate consignment document, okay, they are initially recognizing at cost if the asset recognition criteria are satisfied. Okay, I know something is there coming in your mind regarding internally generated intangible asset according to IS 38. I know, just keep it with yourself now. When we come to answer, we'll use it that time. Okay, coming to tangible asset, here also they have shown you the breakdown: property, vehicle, other equipment. Okay, now regarding depreciation. So depreciation rates they have given: property they have taken on lease, so 5 years; vehicle 3 to 8; other equipment 3 to 15. Can you see there is some something, I mean, if you see the rates, the years, they didn't give a fixed year, they have just given a range. So it's very easy for someone to manipulate. They could use any years between that range. So that's another problem. But anyway, we'll use it in our answers. Next comes provision. Under provision, there is two things: restructuring and rebate. Remember rebate, they told under note 5 that rebate is here. So this restructuring provision will act to redundancy and other obligations that arise on December 2003. Now it is June 2005. Just check the year. It is 18 months before. One whole year of 2004 and 6 months of 2005, because it's June 2005. So 18 months. Coming to leases. They have used lease the head office building and distribution warehouse. Okay, both are taken at the same time. Okay, both have 5 year. Initial period is 5 year, but remember they have an option to extend for further 5 years, and according to the past they are going to extend this. They are more likely to extend the leases. That means it will be 10 years now. Lease term will be 10 years. So that's it. Now go back to your requirement and read. By the way, I forgot to mention one thing. How do you read a question? First of all, understand, because you have a limited time, and in your actual exam, understand it's 50 marks question, the first question, and it's going to be more lengthy. There'll be more exhibit, more things to read, and you need time to read as well as write. Reading, thinking, and writing. All this will come in the time limit, 3 or 15 minutes. You cannot extend that. So you need to decide how much time you are going to spend on reading, understanding the concept, and writing. Okay. And you should not spend so much time reading. I mean, you can, but it should not be like you will not get a time to read it double. You will not have a time to read it second time, the entire case study. So make sure that when you are reading it for the first time, even though you are taking a little bit time the first time, take that and understand the proper concept rather than reading everything so fast just to say for the sake of saying that I've finished reading, I've saved time. Rather, you will save that time later on when you come to write the answer actually, if you take more time on reading to understand. Because some of you are slow readers, some of you are average, and some of you are very fast. It's good if you are very fast. It saves time. Like you read fast and you understand fast. Some people they grasp things very fast, but some it takes time. No, it's fine. Okay, do not panic. Do not think I have to finish it and have to start writing quickly. No. Understand, because once you understood, writing becomes very easy. You will save time there. You can write faster because you know what you are actually writing since you have understood the whole case study. That's this is the skill, attitude that you need to carry forward for your other ACCA professional papers also. Not just professional, but even F level papers, but mostly professional because more writing and reading comes there. Okay. So first you read the this thing. You start, this is the first point. You read the scenario, it says the scene. Once you know what industry, what you are supposed to do, then go through the requirement. First is the requirement. Because you have read the requirement, you know what you are looking for. You know you are looking for risk management statement and audit procedure. So now you read exhibit given in the order. It's better to read given in the order. Exhibit 1, 2, 3, 4, no matter however much they are. Okay. For example, if you see exhibit 1, not much to write because they just told you are planning to audit. That's it. And they have given the question and the marks. Okay. Exhibit 2 also not much to read because they are numbers. The older thing is you have to read under the notes. So this saves the time. You understand? You cannot just say, okay, I'm going to spend 5 minutes for each exhibit. No, some exhibits are shorter, some exhibits are pictures, some exhibits are just numbers. So it saves time. Some exhibit you need to spend more time because you have to read a lot. You have to wise here, okay, to take the wise decision. And it's my advice, I always advise, in your AAA, do the first question as soon as you get it. Why? Because it carries a heavy marks, professional skill marks is there, and it gives you a higher chance of scoring well and passing AAA when you do the first question. Because you need more energy there, more time there. And when you have just started AAA, your mind is fresh without anything to panic. So when you're freshly starting that new paper, new question, you will be able to do it better. Because students often perform better in the first half of the exam compared to the next half. They are more relaxed, they are more calm. But when you are coming towards the end, the next half, after 1 or 30 minutes, you start panicking, you start pushing, running, so you are more likely to do mistakes. Okay. But it's up to you, whatever you want to do. But my personal advice, if you want to increase the chances of passing AAA, do this question as your first question. Now, so we have read everything. Now, again, have a habit, because you have read so much, you must have forgot the requirement. It's normal. You don't have to memorize the requirement in your mind because it's always there in front of your screen. You can always open the window and see. So go to requirements again and read before you start writing. The same technique in SBL also. Same technique in AFM also, ATX also. But mostly triple and SBL, they're similar because more to write there compared to other papers. Taxes, numbers, calculations are there, so it's easier. AFM also is the same thing. SBL also, you know the standard and all. But AAA and SBL and APM, these three exams are more likely, like you have to write theories and all. I would not even say theory, but you have to use your knowledge and apply to the scene. So writing is more compared to calculations and all. So more likely that you forgot the requirement is fine. So now first requirement, evaluate the risk. Evaluate. The word is evaluate. If it was identify, you can just write it in bullet points. Just identify is enough. Now you have to explain also. At least 3 to 4 points you have to write under each risk. First, decide how many risks you are going to write. It should not be just because it's 12 marks. It should not be 12 risk. Why? Because when you're evaluating each risk, at least 2 to 3 marks you are getting for each risk. So let's say you could give 6 to 7 risk, because let's say this 6, let's say you are getting 2 marks for each. So 6 into 2 will give you 12 marks. One for identification of risk, the other one is for explaining, evaluating it. Okay. But best thing that I always apply, in case you are not sure whether you are going to get 3 marks, 4 marks, 2 marks, you don't know, right, how many marks you're going to get for evaluation. Do this. I'm sure no one ever told you this, because this is 12 marks. Okay, divide this into 2, it's 6, right? Always try to write more than this, at least 7 point. 6 is good, safe, but it should not be less than 6. It should not be half of that. Half of 12 is 6, so you should not write 4 or 5 risk. It's not good enough. But the more you write, the better it is. At least 6 to 7 or even 8 is fine. Stay in this range. Don't write 12 risk. You cannot, because if it was identification, writing 12 risk is fine. But you have to evaluate. So evaluation also counts marks. Okay, so 6, 7 or 8 points will give you the marks. because you don't know how many marks, whether it's for 1 or 2 marks, 3 marks. So this is how you do. At least you are sure 1 point will give you 1 mark. That much you are sure. Okay, whether it's for explanation is 2 marks or 3 marks per risk, you don't know. But at least you know this. So apply this. Same for here. Okay. But here, since this is not evaluation, this is just design audit procedure. You just have to list the audit procedure. It's easy that you can just give 4 audit procedure here, 4 audit procedure here. This type of question, the word is easier here. Identify, design, explain. But because this is evaluate, both pros and cons, you have to show both the side. That's why it's more marks. That's why even if you give less than 12 risk, you will get the marks. Okay, this is what I wanted to show you. Now first we'll start writing A. Why? Because it carries heavy marks. Try to answer questions which has more marks. Okay. I know you must be panicking right now thinking 12 marks, and some of you must have read the answer. At least you have gone through the answer. Don't judge, okay, your marks based on the number of pages. Don't say that I'm going to get the full mark or I deserve full mark because I wrote 5 pages, 6 pages. It's not the number of lines. It's not the number of pages. Don't ask me, ma'am, how many pages should I write for 12 marks or 20 marks or 50 marks? It's not that. It's not the quantity, it's the quality that matters. Some of you write less but still get more marks. Some of you write too much and still you're not able to secure that much marks. Why? Because you must be beating around the bush, repeating same points or making points which are not important or relevant. So it's about the relevancy, not how many. Okay, I have told you, I have given you the guideline. Now let's start answering. A. Remember, you are supposed, okay, to write this in a briefing note. Okay, I've given it somewhere. It's here. Wait, I think it's in exhibit 1. Exhibit 1, most of the time it tells you the format. You see here, you are likely to prepare briefing notes. Okay, using the information provided in exhibit 2 also. That means you need the financial information. Exhibit 1, not much information is there. It's just the email and the requirement. So, a briefing note. First, keep in your mind, you have to write this answer in a briefing note. Even if you are writing what is correct, and if you're not writing this answer in a briefing note, you are going to lose those marks. Those professional skill marks you are going to lose. And you as an ACCA student very well know the importance of 1 mark. Okay, especially imagine yourself failing in 49 or 48 just because you didn't work around those professional skill marks. You easily throw away those marks. Those are the easiest mark you can score. Just following the format. Okay, so first we are going to prepare a briefing note. So let's do that. So because this is the first question and I have set the tone, with this understanding, question 2, 3, 4 you can carry forward and I'll be able to do it a little faster because it's just a repetition of this with new company and some new information. That's why I'm spending more time in this question because this is the first question, a first full-fledged question in AAA that I'm doing. Okay, that's why I'm taking a little more time in this first question so that I can reduce that time proportionally in question 2, 3 and 4. So let's start. And yes, because this question you will be doing it on a CV platform, you can type the answer in word processor. You don't have to write it, you just have to type it. So that means from day 1 you have to practice try to increase your speed of typing. Okay, you should not spend so much of time typing, otherwise you will lose valuable marks just because you are not able to finish the paper in the time given. And this is one of the most important factor wise lot of students fail, especially AAA. Lot of things is there to write. So anyway, without wasting so much of time, let's start. Okay, so first it is briefing note. After you finish this, after you see my answer, you can always check with the answer given. Now then you will understand, then you read the answer and you will see whether it makes sense or not. So this is the format. Okay, you need to memorize this format, by the way. You need to know it. This will help you even in SBL also. So briefing note, first you start to whom you are writing. To whom are you writing? Remember who gave you the email? Who gave you this email? Check exhibit 1. Email from audit engagement partner. So he is the person to whom you are mentioning this briefing note. Okay. 2. Okay, I will write it here. Wait. 2. This is A. You have to mention that it's a briefing notes. The format has to be written here. Then to whom you are writing? Audit engagement. Any question comes, you have to follow this briefing note. Briefing note is going to remain the same. To audit engagement partner. Then next is from whom. From whom are you sending? Who are you? It is given in the very beginning that you are an audit manager. This is your role. So from audit manager. Then comes the date. Which date you are auditing? 30th June 2005. Year end is this. So choose the next day. That is 1st July 2005. Then subject. You have to have a subject. Okay. What could be the subject? Think. Subject is basically which gives you a hint what is there you are going to write about in short, briefly. So you are planning the audit of this company. Subject could be, this could be your own, okay? But keep it very brief. 4 or 5 words is enough. Don't write sentences there or all your requirements there. Planning of the audit of, mention the company, okay? Mention the name of the company. It is Yale's company. And give the year end. For the year ended 30th June 2005. You need to have an introduction always. Okay. Keep introduction in bold. Then introduction should not be more than 3 to 4 lines. 2 to 3 lines. Okay. It's very brief. How do you write the introduction? This is the hint. When you need to write introduction for anything, always read the requirements. You need to pick up your introduction from the requirement. What are the 2 requirements? A and B, this 2. Evaluate the risk of material misstatement and designing audit procedure. So this is what you have to write in introduction. See how am I writing the introduction. Okay. That means what is the purpose of this briefing note? That's what you are writing. So this briefing notes. You can always even memorize this introduction. Just change the name of the company and the based on the requirement, introduction changes. But the wordings you can use this. This briefing note evaluates. The requirement was evaluate material misstatement. So evaluate the risks of material misstatement. First requirement was this. And give it in the order of the requirement. First requirement was evaluate risk of material misstatement. So in your introduction also write this as first. This briefing note evaluates the risk of material misstatement and means there's another requirement and suggest audit procedures. To be included in the audit plan. In respect of two things, leases and restructuring provision. Make sure after you see this, pick up a question, any question, and you try to do on your own using this method. I've given you the guidance how to approach a question. So first is a part, risk of material misstatement. This is what we are going to answer first. Even if you write B, there is no harm. Okay, audit approach. Okay, now comes the question. How are you going to pick up the risk? See, choose the area where you can, which is very common for any question, for any industry, where chances of material risk happening is very more. Which is the one? Look at your financial statement. So the first thing is you see revenue is given. Start with this. Most of the time, revenue is the major portion where risk of material misstatement is highly chances are there. So start with revenue because it's on a safe side. Okay, because it's very easy also to identify for anyone revenue. So we'll start with revenue. Use this as a subheading. Okay, when you're using it, when you're typing this on your word processor, make sure that you have bold this. Okay, because to show it's a subheading. Revenue and rebates. This is the first area where risk of material misstatement could happen or must have happened. Under this, now I'm going to write. See how I'm going to write this, because the way I write for revenue is the same thing, the same consistency I'm going to write for the other areas also of the risk. Once you understood this, you will understand. Okay, always start first by identifying whether something has increased or decreased. That means you need to do some calculation also, whether something drastically increased or decreased. Why? Because numbers is given, so you can show the increment, whether it became worse or it improved. How will you show it? Through calculation. You see, go to exhibit 2. You will need exhibit 2 only. Okay, you see revenue from 2004 to 5 it increased, right? Just by saying it increased from this to this will not give you any meaningful picture. See, this, the topic is, what is the topic? The topic is material misstatement. Look at the word material. To show material, you have to show the figure. Remember in the previous lecture, I have given you the table to show what the quantitative threshold is given. For total asset, what is the materiality? For sales, if you are taking, what is the materiality? I think it was 1 to 2% or half to 1%, I think. So if anything more than 1% or 2%, it's material. So do a calculation here. This is a rough calculation. You can use your rough papers to do this calculation. So show the change. Okay. And the old figure is 144.4. Okay. Into 100. If you do this in terms of percentage, you will get 11.8%. You see it increased by 11.8%. So it's material. You need to write this. Okay. First point. This for anything you have to do, not just revenue. So first paragraph will be revenue has increased increased by 11.8%. Always show it in terms of percentage, not from here to here. Next, once you have showed, okay, I will write here increase or decrease is the first for anything. Second will be standard. Which standard is applicable? Second is always standard. If you have any standard, some do not have standard. I will show you that also later on. Does revenue recognition has a standard? Yes, according to your SBR. Here you have to use your SBR knowledge. This is the area where you need your SBR and you need to be correct on the fact. So in case you forgot revenue recognition, no problem. I have my SBR lectures out there. I have completed the SBR syllabus entirely. Go back to my SBR lecture playlist and go to IFRS 15 and check. Okay, under IFRS 15, how you recognize revenue. So you start like this, IFRS 15. Now you can label the standard or just say IFRS 15. IFRS 15 means revenue from contracts with customer. Okay, I'm not writing it. So this is, I have left a space to show that it's in the next paragraph. Okay, you have to write your answers in paragraph, leaving space, not as an essay, not in one thing. Okay, so IFRS 15 states, that means how revenue is recognized. Okay, states that revenue should be recorded See, please understand, when IFRS 15 comes, people often ask me this question, what to write? Means it's a wide area. 5 steps of recognition is there, the 5-step model, then performance obligation. What should you write? See, this is regarding revenue and rebate. If you see rebate, it is on the consideration. It is something that is it can change. Okay, somewhere here, I think note 1. Read note 1 again. Yes, revenue is net of rebate, and this can increase with the volume, and it is calculated on cumulative sale. It can increase with the volume. We still don't know the rebate. Okay, and rebates that have not been paid are there in the liability. So it's something you see, it's not fixed. So they are leading this to consideration price. Which area you need to be wise enough. You have to think out of the 5-step model. Is it talking about performance obligation? No. Is it talking about whether contract is there? No. Is it talking about allocating transaction price to this? No. It is talking about consideration price. What should be the consideration price? That is what you are going to recognize as a revenue under this contract. States that revenue should be recorded at transaction price. That means this transaction price is what? See, basically you are using the knowledge part of IFRS 15 now, okay, which is I've covered this in SBR very in depth, which is the amount of consideration, because this is about consideration. Okay, rebate. Consideration expected to be received. Use the word expected. Consideration expected to be received for delivering the service. This is a service you are delivering. That's why we're writing for delivering the service. Okay. Rebate is what type? It's not fixed, it's variable, no? So from your knowledge part, write about variable consideration, what the standard says. Then we are going to apply to the case study. Don't start immediately applying to the case study. First, use the knowledge of the standard. Say what the standard says. Then you apply to the case study. That is in the 3rd paragraph, next, later on. Okay. So, if any amount, because we all know consideration can include both fixed or variable. So, if any amount of TP is transaction price. Just in order to save time, I'm using short form, but in your exam, do not use short form. Examiners will not understand. These are not standardized short forms. You have to use you need to type the whole word, okay? Transaction price is variable. If any of the amount of transaction price is variable, what the standard says? The company must estimate. Here you have to estimate. Must estimate the amount of consideration expected to be transferred. That means how much of consideration will be transferred. Now, 3rd paragraph. 3rd paragraph, linking to the case study. Linking to exhibits is the 3rd. I've kept some space. Okay, this is the answer. Sorry. Okay. Now 3rd paragraph. You see, this is regarding volume. Higher the volume, more will be the rebate. So we'll talk about that. The volume related rebates create variability. This is a variable. That's why we are talking. That's why in our answer we talked about variable. Otherwise, we should not we should have not talked about it because it's there in the case study. So the amount related variables, sorry, the volume related rebates create. If it was just a fixed transaction, we would have talked about fixed consideration only as a transaction price. Because there's a variability, by reading you will understand. That's why we talked about here what the standard says. So the volume related rebates create variability because it's just that we have to make sure that we are applying the standard correctly or not. Creates variability for the transaction price, for TP, transaction price. Here, can you just do any estimation? No. What should the company do? They have to use experience. The company must use experience to estimate the level of rebates, because we don't know what would be the amount of rebates. You need to have an estimation here, and for that you need experience. The more experience you have, the more correctly you can estimate. And remember, this is a new client, so you might not have so much of experience as an auditor. Okay, so estimate the level of rebates that are likely to be paid. Now the fourth paragraph. Fourth paragraph is the risk. Risk. In other words, understatement of an asset, liability, income, expense, or equity, or overstatement. This is what you have to write. And for each risk, you have to write this. Whether something has been understated or overstated. This is the fourth paragraph. I've written this earlier. I have this. Okay. So if you see the revenue, okay, there could be a chance, right, that revenue could be overstated because you see revenue increased also. So there could be a chances that revenue has been overstated. So that's what we are going to write. Write it like this. Don't say it increased or decreased, right? Use these terms, okay? In your AAA, you should know what terms, what language you have to use. You have to use the language of the auditor. And the language of the auditor is that they are not sure. They will not give you the 100% assurance. They will always give you maybe, likely, highly, chances are there, like that. There's a risk, okay? There is always a risk in audit. So there is a risk of, we are not saying revenue has been overstated with 100% assurance, but we always say there's a risk of this happening, risk of that happening, okay? There's a risk of overstatement of revenue. How can we say overstatement? See, client, obviously anyone, we always want to show more revenue, not less revenue. And this is supported by the fact that we saw revenue increased by 11.8%. Okay, so there's a risk of overstatement of revenue if rebates, you have to link this with rebates, okay? If rebates have not been estimated on a reasonable basis. Or if actual rebates for the last quarter has not been acquired at the year end. Okay, you can write it. Okay, if the actual rebate for the last quarter has not been acquired at the year end, that also could be a reason. Now the last paragraph, fifth paragraph. Correct treatment. You explain the incorrect and correct the treatment. Fifth, the last. Okay, so you see rebate is there under provision and as a long-term liability. So do you think it's correct? No, it should not be. So rebates, first write the incorrect treatment. Rebates have been then corrected. What rather should have been done. So rebates have been included as a provision on the statement of financial position. Okay, within non-current liabilities. And you have to correctly say, very strongly you have to say which is incorrect if you are very sure. This is incorrect. Now tell the correct. Rather the rebates. Okay, so rebates should be shown as a contract liability. Remember, this is revenue from contract. It's a contract liability. For the rebates that you are due to be paid, okay, it's a liability, but it's not a long-term liability. It comes under contract liability. Within, and it should be within current liabilities. For this, you should go through my SBL lecture IFRS 15, okay? Within current liabilities. Therefore, so now you talk about the misstatement. Therefore, there is a misstatement. You should always clearly see whether the misstatement has been there or not. So there is a misstatement. Because of this, there is a misstatement. Why that misstatement arose? You have to write the reason. Misstatement arising from incorrect classification. You see, you have classified it incorrectly. Classification and presentation. You have presented under non-current. Even presentation is wrong. You have classified it as provision. That is also wrong, rather than contract liability. So both classification and presentation is incorrect. That's my misstatement. Now, with this understanding, we'll do the other risk. Okay, now I'm going to do a little bit faster because already around 48 minutes we have spent only on the first part of the question. 1 point only. So the next could be any order you can write. Okay, there is no such thing. But it's better if you can, I mean, since provision, this marks is there, professional skill will always see how you are prioritizing the risk. That means the order of risk that you are giving. The highest impact will be the first one, then the second, then the third and fourth. Okay, so first one was revenue, 11.8%. Now the next. So next, if you see, you can talk about restructuring provision. That could be the next one. It's under note 5. Okay, for provision under restructuring provision. Now, why did I took restructuring provision as the second one out of all? Because when you are doing it, before you write, remember, do calculation first and to see which one is material. The most material, you are going to get professional marks here. It's very important that you prioritize the risk and present in that order. Most material will be the first one. Then the little less than the first one, the next one. So most material was sales. 11.8% was the growth. Next one, if you check by the percentage, you must have done some initial calculations roughly to check the materiality, because this is a question on risk and material misstatement. That's why. And numbers are given. That's why we know the order. That after sales was the next one. Keep calculation ready for all, I would say. Even for the staff cost and all this, and see which one is more material. Okay, and in this industry which is going to affect more, if you can see by the nature also, just not by the calculation alone, by the nature also. Sale is very common for any industry. Next one is, in this case, it's restructuring. Why? See, under note 5 they told restructuring is for 18 months. It was 18 months before, but they have included it here. So by nature also this could be material, and if you check the calculation also number wise also is material. We'll see now. So the next one is restructuring provision. This is how you pick, you see, this is how you pick points when it comes to material misstatement. This topic. So first one is done, revenue restructuring provision. Same thing we are going to apply. What are the same thing? These 5 steps. First, increase or decrease. We'll go to show it by terms of percentage. Second, SBR standard. Third, linking to the exhibit. Fourth, the risk, whether understatement or overstatement, and then the correct treatment. If it was incorrect treatment, we correct. If it was the correct treatment, we just show what could be the chances of the misstatement. So the first one is, we'll see whether it's material or not. Go to note 5. See, restructuring, just check the current year, it's 9. Take this out of total asset to see whether it is material or not. What is the total asset? You need to go to, it's 9. Total asset from your statement of financial position, 103.8. So just do a calculation. 9 over 103.8 into 100. If you take it like this, you are going to get around 8.7%. And this is material. So you first saw sale increase by 11.8. It was higher than this figure. That's why it was the first one. Makes sense now? And this is 8.7, less than that, but material. Second. The third risk that you are going to write will be even less than 8.7%. Now, so this represents restructuring provision, RP. In order to save time, I'm using short form. In your exam, do not use short form. These are not standardized. RP, okay, of 9 million. Show the figure. Which figure you have used. That's why I'm showing of 9 million, because there are two figures. One is actual, one is the draft. We don't know which figure. So this one of 9 million represents 8.7% of total assets. Therefore, is material. Basically, material things only you are going to write. Immaterial things you will not write, because this is material misstatement. Okay. If you write immaterial risk, remember, even though you are writing risk, you are going to lose marks. Professional skill marks you are going to throw away easily. Okay. Therefore, it's material, and because it's material, it's an area of significant risk also. Now, first part is done. SBR knowledge. Which standard talks about restructuring provision? Use your SBR knowledge. When you are doing AAA, don't forget SBR. Keep both together. IS 37. Yes, IS 37. Restructuring provision, contingent liabilities and contingent asset. For this also, go to my SBR lecture, check IS 37 and check the rules on provision. So IS 37 says provision, I'm not going to write it, you can write it on your own. Provision should be recognized when, if there's a present obligation because of the past event, that there's a probability of an outflow of benefit, and you can measure it reliably. All those things. Okay. So now, link it to the case study. This is 18 months old provision. Okay, 18 months ago. This restructuring provision took place 18 months ago. There is this restructuring. So, therefore, This may no longer be an application for the there is no longer an obligation for the company to fulfill it now after 18 months. 18 months ago, therefore, okay, sorry, not therefore, there may no longer be any obligation for the company to fulfill. So it's very easy. Correct the treatment. Here they didn't write it anything incorrectly. It's just that they have recognized the risk provision. So you should, so that means this provision has been overstated because they have recognized the provision, right? So there is a risk. Always write there's a risk. There's a risk, there's a risk, there's a risk. This is the auditor's language that you are using in AAA. Remember, there's a risk that the never say anything with 100% assurance, okay? Always say there's a risk. There's a restructuring provision is overstated. Here also it's an overstatement. These words are very common. It's your vocabulary. Auditor's vocabulary is there's a risk, maybe, overstated, understated, misstatement. These are the auditor's vocabulary. Okay, that's it. Risk. If you go by the number, since we have not calculated, okay, this the moment you get the paper, start doing the calculation for each one of them. Write the percentages next to each one of this to show which one is material. The most material first one, which is revenue. Then restructuring. What is the third one? Third one is intangible assets. Intangible asset, note 3. Okay, see the increment, it increased by 1 million. But in terms of percentage whether this material or not, you have to check in terms of total asset. This is 7.2. Total asset is 103.8. So 7.2, 103.8 into 100. In terms of percentage, it is 6.9%. You see, is it following the order? Yes. First one was revenue, then it is restructuring provision, then now it's 6.9 intangible asset. If you show it like this, you are going to get your you will get your professional marks. Remember, because you are prioritizing based on the materiality. The first, most material first, then the second material, then the third material, fourth material, like that. The hardest part is revenue. Remember, after that things are easier. Other risks are usually easier to explain. Okay, I will rub this. So third is intangible assets. The more you keep on repeating this pattern, the more it will be there in your mind. Same statement. First, it increased by 1 million. Increased by 1 billion and represent 6.9% of total assets, TA. And repeat. And therefore is material area of significant risk. Same as restructuring provision. This line. Repeat it. Okay, write it again. Okay, next paragraph. Which standard deals with intangible asset? IS 38. Again, go to my SBL lecture. IS 38 is there and see what it talks about internally generated assets. Okay, so IS 38 says about what? You have to talk about only this thing. Internally generated intangibles. What it talks about this under IS 38. So IS 38 says that internally generated intangible asset should not be recognized. But here they have recognized. So they have done a mistake. It should not be recognized. Okay, because you cannot measure them reliably. Give reasons why. Okay, I will write it for you. Because as they cannot be, because they cannot be measured reliably. Okay, but in this case what happened? Link this to the case study, please. This is an internally generated software. Okay, so in this case what did they do? They capitalized it, saying, okay, if the company can demonstrate it is technically feasible, okay, that they are going to get some future benefit by either holding the software or selling the asset, or they can measure it reliably. This is regarding internally generated software. Link this to the internally generated software. Okay, so here what's happening? Third one, intangible asset overstated. Overstated, right? Here also they may be overstated, especially if you are recognizing those intangible assets which are not recognized, which does not meet the recognition criteria, but you're still recognizing them on intangible assets, then IA is overstated. Okay, now comes the leases. So if you go, the next one is leases. Leases also will see. Wait. Okay, so leases 5.4. Out of total asset, how much is lease? 5.4. Total asset was 103.8 into 100. If you check it in terms of percentage, is 5.2% of total asset. Is next material lesser than intangible asset. Intangible asset was 6.9. This is 5.2. So you can write it 5.2% of total assets. Leases. So it's material. Okay, material and area of significant risk. Copy paste. Second, which standard? IFRS 15. Sorry, IFRS 16. I'm sorry. IFRS 16. Again, go to my SBL lecture and check IFRS 16 in case you forgot the rules. Okay, IFRS 16 says what? I'm not going to write it. You can write it on your own. I will explain you because me writing will take time. Leases should be recognized as right of use asset. That means right of use asset. You have to recognize this. And also a lease liability. These two things you have to recognize. Okay, this you recognize as a present value of lease payment. Whatever the lease payment, find the present value. That will be your lease liability. Okay, unless the asset has a low value, because low value is exempted. And if the lease is less than 12 months, it is taken as an expense. Okay, next. What is the issue here? Link it to the case study. If you see a statement of financial position, you see under non-current only tangible and intangible. Nothing has been mentioned about ROA. So it has not been presented there. Okay. So this assets, they are not separately classified on the statement of financial position. So that means there's a misstatement. Why? Due to Incorrect classification and presentation is the same as the provision, restructuring provision. Incorrect classification and presentation. That's why it's misstated. Now, correct the treatment. Correct treatment. Fourth paragraph. RUA asset. Remember, it's an asset. Every asset should be depreciated, right? Should be. You have to talk about depreciation here. Don't forget depreciation when you're talking about ROA assets. It should be depreciated over what? Over lease term, because you have taken this as under lease. What is the lease term? When you're taking the lease term, you should also see the option to extend. And they are going to exercise the option based on the past. You have to explain this in your answer, okay? So now the lease term is 10 years. But they have taken 5 years, which is incorrect. Okay? So because this is incorrect, last one, misstatement. Depreciation is, there's a risk that depreciation is overstated. Okay, depreciation of this asset is overstated. Because if you are taking something over 5 year, depreciation will be less compared to if you are taking 10 year. I'm sorry, depreciation is going to be more. But if you are taking it over 10 year, depreciation will be less. So it is overstated and ROA asset is understated. What happens because of this? There is another way you can see your commercial acumen. How? Or analyzation. See, professional skill marks is also for analysis, right? Analysis means how you're linking through the exhibits. Analyzing means you are taking the whole picture. You are linking to the. So if you see this, go to your note 3, 4. If you see property, it reduced, right? So this explains with the fat. It's consistent. This is understated, is consistent. This explains why the carrying amount of property is lower this year. Okay, wait. This could explain. It could, okay? Use the word could, maybe, should. Okay? These are the words of probability. These are very famous in your auditor's vocabulary, I told you. This could explain. We are not saying it's 100% we are guaranteeing it, but this could explain why carrying amount of property is so much lower this year. And property is under lease, by the way. That's why we specifically talked about property only. Other twos are not under lease. Next is, if you go by the number, material wise is operating expense. Under operating expenses, you need to break down material expense, staff cost, and other expense. So first we'll talk about material expense. What is the percentage? You see how much material expenses increase. Check the increment. From here to here. Okay, it's like this. 88 minus 74.7 divided by 74.7. If you see it in terms of percentage, the increment is 17.8%. It's more than the increment in sales also, which is not a good sign. So material expense increased by, obviously in your answer you cannot show the arrow like this. I'm showing it for explanation purpose. 17.8%. More than 11.8% for sales. Sale increased by 11.8%. So you see, it's an unusual fluctuation. Use these words. Unusual fluctuation, isn't it? Try to give reasons if whenever this. that it could be because of this, it could be because of that. Okay, so this could be if fuel cost increased. Okay, it could be legitimate if fuel cost also increased, but we don't know any reason whether fuel cost increased or not. That's why we are saying it could be that material cost, because under material expense fuel cost is there. Okay, but this increase could cause misstatement. Why? Maybe capital expenditure you must have taken as a revenue expenditure. Okay, however, the increase could indicate misstatement in relation to CA, capital expenditure, CE, treated as RE, revenue expenditure. See, when capital expenditure is treated as revenue expenditure, your expenses will go up. You see, this is how you are also getting professional skill marks. How? You are showing commercial acumen. You are showing commercial acumen here. That means you are showing that you have an understanding of the industry. You have an understanding of the concept. That if this is that, this could be done. If this is that, that could, you are giving more reasons than that is given to you in the case study. That means you are showing knowledge. Commercial acumen means you are more aware, you have more knowledge of the industry. That is the meaning of commercial acumen. So by writing these lines, you are automatically getting the commercial acumen marks. That is your professional skill marks. So if you incorrectly treat revenue expenditure as capital expenditure, also cost could go up. Other way could be if fuel cost increase, it makes sense. It's legitimate to say material cost also is higher, but we don't know the reason. What could be this thing? See, you have been given some expenses. They have labeled it. Capital expenditure could be, what is it? Overhaul or major. These are capital expenditure, but you have write it as revenue and expensed it in P&L. Major refurbishment. That means this could be a misclassification of expenses. This leads to a what happened because of this? There is an overstatement of material expenses. I mean material expense. There's a risk. Now we'll see it in relation to other. See, if you see other expenses, it went down. We'll check the percentage. And if you see staff cost, it increased. Depreciation and amortization, we don't have to talk about it. We already have covered it. We have a separate subheading for it. That will be the next. So here, other expenses, EE. If you see this fell down by 15.5%. Check. Even this is unusual. Given the type of business you are, you see there's an increment. 2000 plus employees, business is increasing. So this is unusual that such expenses have fallen down by 15.5%. Why? Why is unusual? Because business is increasing, no? Business increases, expenses also increases. And this fall in expenses is not 1 or 2%. It's 15.5%. That's why it's unusual. Even this may indicate understatement of expenses. That means some expenses you must have not written. There should be expenses. Understatement of expenses. This could be due to misclassification. Due to either you have misclassified it into the wrong category the expenses or underestimation of accrued expenses, of underestimated expenses. Next is staff cost. Staff cost, you see it increased by 14%. And you should investigate this, and this should be see, remember before provision revenue we told this should be done this, that should be done this. Why? Because we had a specific standard. But for cost expenses like this, staff cost and all, we don't have a standard. So here you can generally give an answer. Generally say this should be done, this should have been done, this should be investigated, like that. So staff cost increased, just leaving it empty like that, not explaining what should be done, you will not get full marks. Just say staff cost increased by 14% will not give you any marks. You have to write this should be investigated. You cannot leave it like that. Why it increased, what should be done, you have to write it. This should be investigated to ensure that this is consistent with movement in employee numbers. You see, employee numbers was 2000 plus. If employee number increase, it makes sense, staff cost increase or pay increases. Next is depreciation. You see, there were leases. Why this expense separately we are explaining it? Because there are leases, there are intangible assets. That's why. Depreciation and amortization. Another risk. So here, see here we are not following that previous one, okay? First you explain how much it increase. Okay, increasement and all we can write, but not standard and all. We don't have a specific standard for it. I mean, depreciation comes as a part of IS 16, property planning equipment, and amortization comes for intangible assets under IS 38. But specifically just depreciation, we don't have a separate standard, okay? That's why we are not mentioning any standard under this, nor under expenses, operating expenses. But for the others, we have done leases, intangible assets and all. So here, you see, this fell down from 9.5 to 8.5. So next one is depreciation and amortization. This fell down by 10.5%. Okay. So you can give reasons why, under what conditions this could be valid. Okay, this could be valid if they have a significant assets which already has been fully depreciated. Then it makes sense that depreciation reduced, or the asset base is lower. Let's say they're having less asset this year. Why? They might have less asset because of restructuring. You see, there was a restructuring done, so because of that they might have a less asset. And also the restructuring in the before year may have resulted in some impairment, which increases the last year's depreciation. Okay, but here there's a risk of understatement of depreciation. And overstatement of assets. Don't forget to mention that line, okay? I'm not writing it, always I'm not repeating it. You can write it. There's a risk that there's an overstatement. There's a risk that there's an understatement. If not all assets had been depreciated, or assets has been depreciated at the wrong dates, chances could be there. Wrong rates, sorry, not wrong dates, wrong rates. You see here, they have given 3 to 15, 3 to 8. So they don't, you can choose this or in between anything. Clearly, they have not mentioned. So it's very easy for you to choose a wrong rate. So because of that also, there could be an overstatement on the statement of depreciation. Because there's a wide range of rates. Or if the final month's depreciation has not been given in the year end. I mean in the draft figure if it's not given. Now we are moving to receivable. So how many risk did we write? Risk of material misstatement, what? How many areas? Revenue 1, 2 restructuring, 3 intangible, 4 leases, 5 operating expenses, 6 overstatement. Sorry, 6 depreciation. So another 1 or 2 and then we are finished with the first requirement. Receivable is the next one. Okay. Check trade receivable. It increased. Okay. How much is the increment? Increased by 2.2%. Okay. And if you see revenue increased by 11.8%. Already I've done this. You can also calculate, see, you can, because we have talked about receivable. What is important in receivable? It's the receivable collection. This is a very important ratio for anyone. You want to know how quickly your customers are paying you. So you can calculate this. Calculate it. Ratios you have to calculate. No, calculate. You have to calculate it in days. How do you do this? You need to know the here. This is the area where you need to remember the formula. And which lecture will help you? It is my SBL lecture from before the current issue. It is interpretation. I think something called interpretation of financial statement or something. Analysis and interpretation. Analysis and interpretation. I'm sorry. It is the lecture one before the current issue under my SBL playlist. That in that lecture I have covered all the ratios. Gearing ratio, investment ratio, profitability ratio, all the ratios are there. You need to memorize it, the formula. Okay, you can like this, right? Anytime you can, any time might come where you have to use the ratio suddenly, like in this case. We need receivable collection period. For that, this is the formula. Okay, where is receivable? It's 13.7. Okay, and this you have to take the 2 years separately to show the increment in the days or decades. So 13.7 divided by sales. Sale of that time is 161.5. It should be credit sales, but we don't know what is the credit sale. We're just taking the sales figure. Because it's you want to find number of days into 365 days. The formula, fixed formula for receivable collection period. Okay. And do it for the other year also. The previous year also. The previous year's receivable over previous year sales into 365 days. You will see there's a decrease, the collection period decreased from 34 to 31 days. This is 31. Okay, you will get 30 point something. The other one you will get 33 point something, round up to the next whole number. Okay, decreased receivable collection period, RCP, decreased from 34 days You have to write days, okay, to 31 days. It's good or bad? Receivable collection period decrease is a good thing or a bad thing? It's a good thing. Your customers are paying earlier now. Cash is coming in. But please understand, in this case, it seems unusual. Seems unusual. If something is good, doesn't mean you don't have to worry. Sometimes when something is good in a bad condition, you have to worry. Seems unusual and may indicate. Why? Because your revenue increasing. Trade receivable is increasing. If you see it in terms of percentage, 2.2%. Sales is increasing. But days are reducing. You see, they are not consistent. So seems unusual and indicate misstatement. Misstatement of receivable balance. Maybe the receivables are not complete yet due to lack of completeness. So the last risk is risk which is not there in the list. What is it? You are a new audit client. So as a new audit client, what should you worry about? Opening balance. The opening balance will not be a concern to you if you are auditing a recurrent or an existing client. But because you are auditing a new client, opening balance will come there. Okay. So you have to talk about that he's a new client. Yet company is a new client. So because he's a new client, that means opening balances might not been audited by our firm. They must have been audited by some other audit firm. No. So because of this second paragraph, you have to write that there's a risk of misstatement in the opening balances. Especially if the last year's audit failed to detect any material misstatement. So as a result, what should you do? Action. Whoever the auditor before you, okay, that is known as predecessor auditor, should be contacted to contact them. And their work papers. I think this also have covered it in professional appointments in my professional appointments lecture in AAA, right? In my previous lecture. That for opening balances, what should you do? So contact their working papers and their working papers reviewed. You have to review their working papers as part of our firm. You are representing your firm. Remember, you are an audit manager referring to your firm. Our firms. That's why you're writing our firms. As a part of our firm's testing on opening balances this year. That's it. We have covered. The first requirement is over. Remember, some of you might talk about detection risk because this is a new client. But detection risk could arise because you might not have a knowledge. Right? But detection risk is an audit risk. You need to understand this also. It is from the point of the auditors. It's not material misstatement, risk of material misstatement. It's an audit risk. And you are supposed to write risk of material misstatement, not audit risk. So do not confuse audit risk with risk of material misstatement. They are two separate things. Now we'll answer requirement B. Audit procedure for leasing and restructuring provision. Because this is listing, we are just listing down. So first is leases. Here you need to apply your understanding. What you will do. More likely you are going to do rather than using the case study. Case studies for identifying risk and all. Where you have to plan audit procedure is up to you. For example, under leases. What are the areas you have to touch if it's leases? Okay, first. And remember, audit procedure, okay, audit procedure has some terms. Not everything is review. like words like review, calculate, okay, inquire, observe. These are the words. This is calculate. Agree. Okay, these are the words, common words. Any audit procedure will include. What under lease? Think about leases. First, we'll draw a visual map here. Okay, a diagram that covers leases. What are the areas? Lease agreement. You can look at the lease agreement. So we are going to talk about lease agreement, one thing. Second, exercise of the option. The option. You have an option to extend the lease. We'll talk about that option. The next one, depreciation, because depreciation differs. What's the next? Lease payment. We have to check whether the lease payment has been done or not. Then what's next? I know it's 4, but we are going to write all the possible answers because some of you might write some points which I might not have covered in my first 4 points. That's why I'm writing all the possible answers. But any 4 you have to write, okay, to get the full 4 marks. But because we are learning, this is for the learning practice, not an exam. So we are writing all the possible answers, more than 4 points. Next. Looking at the financial statements. Well, okay, that means whether IFRS 16 has been applied to or not. Okay. On the leases, we are going to write about it. Coming to restructuring provision. What are the areas we are going to touch upon? Breakdown of provision. Next. Ask management. Inquire the management about the provision. Third. IS 37. And some more are there. We'll see. So first we'll finish with leases. So you have to review the lease agreement, LA. Why? Through lease agreement, you will know the terms and conditions of the lease, and also you can confirm the details of the option to extend the lease at the end of the term. Second, write all this, okay? I'm not writing the full answer. It's already more than 1.5 hours, and we have 3 more questions to do. So I'm just writing the answer very briefly in bullet points, just the points. Next, inquire. Inquire of management. Fill, okay? Fill the blank. So inquire the management what? Whether the company is going to exercise the option or not. You see from what areas you are seeing. First, through the lease agreement you are seeing option to extend the lease. Next, you ask the management, okay, whether the company is going to exercise the option to extend or not. Why? Because then you will know whether your depreciation, the appropriate depreciation period for the property, whether it's correct or not. Third, calculate depreciation. Calculate the expected depreciation charge based on the correct lease term. Okay, and you need to discuss this with the management, because if there is any adjustment that has to be done to the depreciation, management could do it, because management might calculate depreciation on an incorrect lease period. That's why you have to talk with the management. Fourth, agree lease payment. Check the lease payment to the bank statement and cash flow. Check whether they are matching with each other or not, because obviously you must have done some lease payment, whether it's correct or not. Then calculate present and you agree this to the client's calculation to check the accuracy. Client must have calculated there. You also calculate the lease payment, present value of lease payment, and see whether they are accurate, matching with each other or not. Then calculate lease liability at year. Okay, when you're taking this, remember the finance charge that comes from lease liability. You have to see that also. Finance charge and the lease payment. And finally, review the financial to see whether IFRS 16 has been complied with appropriately or not. Okay, or whether you have disclosed the leases in accordance with IFRS 16 or not. Next is for restructuring provision. Audit procedure. The first one, review. Review the breakdown of the provision. Why? Once you see the breakdown of provision, you can identify the cost and also assess whether the costs are likely to be still an obligation or not at that date. Next, inquire the management. What? The provision. You see whether provision is still recognized or not. You ask the management. And whether the costs are still likely to be paid or not. Third, breakdown of provision. I forgot to use the word trace. From the breakdown of provision to bank statement and book. To any cost not paid at the year end, because through bank statement and cash book, you will identify if you have paid the provision or not, or any provision remaining unpaid or not. Next, you see whether the provision is required or it's no longer required. Okay, if provision no longer required, discuss the need to adjustment with management. You have to discuss it with the management because they are the one who have to do the adjustments. Next, review financial statements to see whether provision has been disclosed appropriately or not according to IS 37. Okay, remember we have finished all the requirements and this is a briefing note. At the end, don't forget to put conclusion. You should always put conclusion. And under conclusion, what are you writing? Like your introduction, your conclusion also will be around 4 to 5 lines. It's short. Okay. Basically, whatever you have done until now, in conclusion, you are summarizing it. So I will write the conclusion for you to show you, and thereafter onwards, next question onwards, I'm not going to write the introduction conclusion for you. I'm just going to write the main points. So the above conclusion is not a new piece of information. You are just relating it to what you have discussed. The above audit risk demonstrate that the audit of which company? Whose company are you auditing? Yale's. The audit of Yale's company is a high risk engagement, isn't it? It's highly risky because everything is overstated. is a high risk engagement. Through this audit, that's what you have understood. That's what you have came to conclusion. Next, how are you going to address the risk? These risks must be addressed. So the first requirement you have answered, saying is highly risky. Next one is about audit procedure. This is what you are going to write in the conclusion as well. You have wrote it in the introduction that you are going to do this. In the conclusion, you are going to say, I've done it and this is the result. So this risk must be addressed by designing appropriate audit procedures, okay, AP, to be included in the audit plan. Then, see, this is a high risk and it's a new client. So what should you do? Appoint experienced staff in this audit. Okay, appoint experienced team. Because if you appoint experienced team, what happens? To ensure material misstatement are detected. Are detected. Exactly this way you have to write all the other questions. So with this we have finished our question 1, that is test your understanding 1. Next, now I'm going to move on to test your understanding 2. Test your understanding 2 and 3 are of similar nature like test your understanding 1. So we can quickly move through them. Test your understanding 4 is a different one. It's a shorter, just worth 8 marks, where you have to list your business risk and audit risk for 4 different companies. So let's start with test your understanding 2. Test your understanding 2. This question is going to follow the similar pattern as test your understanding 1. Okay, the only thing is here we have an extra question that is based on ethics. Okay, that's why this is for 30 marks. Okay, the same thing, you have been given the scenario where you are the audit manager. Okay, the name of the company has been changed. This company is into computer controlled equipment for production line industries like cars, washing machines or cookers. Okay, and they are planning to audit for 31st July 2005. Three exhibits are there. First one is about email from your engagement partner. Second, it gives a background. Third, conversation with former colleague. Okay, now professional marks is there for 10 marks. Now let's read exhibit 1. So exhibit 1, basically it is about the that you are planning to audit, they want some advice and things like that. Basically in exhibit 1 you have been given the requirements. Okay, the 4 requirements, sorry, for which you need exhibit 2. For A, B and C you need exhibit 2, and for D you need exhibit 3. You see, using exhibit 3, when they're told using exhibit 3, emphasize your importance on that exhibit only, because it's just 5 marks. Whereas the other 3 are exhibit 2 because they told using information from exhibit 2. Okay, and here also you have to prepare briefing notes. So first requirement is you have to evaluate and prioritize the significant audit risk. In test your understanding 1, it was risk of material misstatement. Here it is audit risk. That's the difference. And it's for 15 marks. So I'm going to apply the same pattern as I did in the first one. It's 15 divided by 2. So let's say 7.5. So let's say 8. So around 8 to 9 points you can give, because I told more than half of it. So around 8 to 9 points you can give for this answer. 8 to 9 audit risk. B is for 5 marks. It is explain how the extent of the reliance that you can place on analytical procedure and written representations compared to the previous year. Okay, that you should compare with that for the prior year audit for 5 marks. Now, remember there are two requirements in this. One on analytical procedure, other one written representation. It means compared to last year, this year how much reliance you can put. So let's say analytical procedure is 3 marks, written representation is 2 marks, or it could be the other way around, 2 or 3, depending. Okay, because together it's 5 marks. Okay, coming to C. Design the audit procedure. Again, we have a similar question regarding audit procedure. Earlier one was for leases and reconstructions provision. This one is for amount that is due from distributor. What is the audit procedure for 5 marks? So at least 5 points you can give. D again is 5 mark, but it's ethics. So comment on the ethical and professional issues that are raised. Okay, and any actions that they should take. Remember, ethics and professional will give you 4 marks and 1 point for that action. Okay, and when you're taking ethical and professional issues, you can divide it equally. 2 marks, 2 marks, 2 for ethics, 2 for professional, and 1 for actions. Now let's read exhibit 2 and 3. So exhibit 2, background information. Background information is usually lengthy, okay, because they try to give everything. Your staff, your organization structure, what date the event that took place, okay, according to the dates. So on 1st of April 2005, what happened? They decide to buy the patent technology and manufacturing equipment. Okay, they are accepting a lucrative offer from a multinational corporation to buy patent technology and manufacturing equipment. So the first audit risk is in this one. You see, the moment you read requirement and then exhibit, you exactly know in the exhibit what you're looking for. You're looking for audit risk. So the first one, you got it in the first paragraph. Second, on 10th April, what happened? They are going to cease all manufacturing activity on 31st May 2005. Okay. By 10th, they have made announcement to all the affected managements. The employees got notified, suppliers as well as customers. And on 31st May, they ceased. So this cessation is the second audit risk. Okay. Now, staff have been made redundant, majority of them, while some are retained. Okay. For example, account departments, majority of account departments, support staff are made redundant. So one is, there are three. Another risk, one is when staff are made redundant, that is another audit risk. When you're ceasing manufacturing, that is another audit risk. Okay, next. So all this will be ceased. Marketing, human resource, production manager, they are ceased to be employed. But chief executive, sales manager, finance manager, accountant, and a small number of accounting, they will be there until the company completely wounds down. Okay, next. So now they have 14 premises, out of which 9, okay, put on the market on 1st of June 2005. Okay, now they have all tangible non-current assets. In the earlier one we had intangible also. Good that we don't have intangible here. All are tangible. Okay, at depreciated cost. That means because cost model. Out of this, 4 are on leases that are expired in the next 2 to 7 years, and it cannot be sold or sublet under the lease term. Okay, then there's a 1-year warranty. With all the computer control product, they carry a 1-year warranty, and they have extended warranties also, extended warranties of 3 and 5 years. Previously it was available at the time of purchase. Now it has not been offered on sales of remaining inventory, so it will not be. Next, they have a 3-year agreement with all the distributor, both national and international, for the sale of equipment. Now what's happening here is distributors are withholding payment of their account balances. That's the next. So there are so many issues. So you can use Exhibit 2 substantially to answer the first three requirements. And Exhibit 3 is regarding a conversation with the former colleague. So former colleague is now employed by another audit firm, which is Keratin and Company. So Scarlett and Keratin and three other firms have recently tendered for the audit of this company. Okay. This is like a tendering. So in this tendering, what happens is they are going for low ball. Low ball means they are keeping their audit fee low. Why? Because they are going to overcome this through giving lucrative services. They are going to overcome that low fee through giving lucrative services. It's basically low balling on their tender. This is the issue, which is again for 5 marks. So first we'll go through. I have copy pasted the answer here so that this saves your time and my time as well. Otherwise, if I sit and write the whole answer, it will take so much of time. It's very lengthy. But since now you know the breakdown, this will be a lot easier for you. Okay. As you can see from here, what we have done it in test your understanding 1 also, we went through briefing note. 2, partner from audit manager date is given and the subject planning of the audit. Okay. So this follows the same layout. Then we have an introduction. In this introduction, all the 4 requirements. There are 4 requirements now. All these 4 requirements will come in the introduction. What you are going to do? So it's explained here. That you are going to evaluate the audit risk, okay, then audit procedures regarding due from distributor, then realize that you can put an analytical procedure and written representation, and finally ethical issue and the response. Next, audit risk. So one by one we are going to list the audit risk. One of the biggest risk, remember you have to prioritize the audit risk, because it's when you are closing the trade that should come the first. Cessation of trade, that is going to have the biggest impact. Why? It raises an issue over your going concern. That means if you are having an issue, you cannot prepare your financial statements on a going concern basis. You have to show it up on a breakup or some realizable basis. Okay, this will have an implications on this area. Your assets and liabilities might now need to be reclassified to current. Then your carrying amount of assets at recoverable amount. Your recorded liability should be complete. Okay. So if you are going by going concern basis, still preparing financial statements on a going concern basis is inappropriate. Number 1. Number 2, moving on to inventory. So inventory could be another audit risk because you are ceasing to manufacture. And you are ceasing to manufacture 2 months before the year end. So according to which standard applies for inventory? IS2. IS2 says lower at cost and net realizable value. So all the items that are remaining there at the year end will be at the lower of the cost and the net realizable value. You are basically using the rule of IS2. Next, this is likely to be nil in this case because you are ceasing. So inventory must be written off in full. Okay. What could be the risk? Same like risk of material misstatement, even audit risk, you could say overstatement or understatement. Okay. So this inventory could be overstated. This is a risk. Okay. Now, next, you are selling your technology and manufacturing equipment. This is another audit risk. See, because we don't have numbers like our previous one, good thing is we don't have to keep on revisiting to our exhibits because we only have to write, not numbers are not there. Okay, so when you are selling, you have to de-recognize the asset, and profit on disposal also you have to recognize, right? So assets de-recognize, profit on disposal you should separately disclose them because it is from discontinuing of operation. That's why in your statement of profit and loss, correct? There is a risk of incorrect disclosure if the profit and loss does not separately, if the profit and loss on disposal is not separately made. Separately you have to show a profit and loss on this disposal, but if you're not disclosing any profit and loss, it gives you incorrect disclosure. Okay, or it might not be even calculated correctly. So now plant and equipment will be overstated if this thing happens. If still manufacturing equipment is there in the financial statement, even though you have sold it. Next, if assets that were not part of the sale are not written down to the lower of carrying amount and recoverable amount. Remember, according to IS 36 impairment, you have to show it at lower of carrying amount or recoverable amount. Okay. Next, you have some assets that you have held for sale. Okay. So if any of the unsold properties meets the criteria of IFRS 5, then you should separately classify as held for sale. Next, lower of carrying amount and fair value less cost to sell according to IFRS 5. In case you want to know the rule of IFRS 5, go back to my SBL lecture and go to IFRS 5. Now, what could be the audit risk? The audit risk is financial statement would be materially misstated if non-current assets held for sale are not separately disclosed. It should be there in your statement of financial position. If it's not there, materially it will be misstated. That is audit risk. Now come the redundant workforce. What happens? See, your statutory redundancy pay, okay, like holiday pay, sick pay, acquired overtime, etc. They are usually settled before the year end, but there are some additional liabilities regarding pension. Okay, so this might be understated. Liabilities might be understated if there are claims arising from the redundant workers. Okay. Now coming to the accounts department. Why accounts department specifically? Because this leads to financial statement. Anything to do with financial statement, you can write in your answer. Okay. You see, the time that I've taken in Touch Understanding 1 is now helping me to reduce my time in other questions. That's what happens when you first time when you're doing a question, you need to spend a lot more time. That's why practice. The more practice you do, the more familiar you become with the question and the pattern of answering, the more faster you can perform. Okay. Account department. Remember, you are keeping fewer staff in this department, right? So if you're keeping those fewer staff, what happens? They are more likely to do error. Why? Because they know soon they are going to lose their job. Okay. So error will be more. And also, this error might not be even detected by the control system. So that's why there's a greater risk of misstatement in the financial statement. Next is leased premises. What happens? You cannot sell them, nor you can sublet them. The premises that are leased. Okay. And the right of use asset might be impaired also. If the recoverable amount is less than the carrying amount, according to IS 36. So there's a risk that tangible asset are overstated if impairment is not recognized. Correct? No? Because if impairment is recognized, tangible asset goes down. Otherwise, it will be overstated. So what happens? A liability will need to be recognized in respect of the onerous lease payment. And liabilities will understate if the future lease payment do not continue to be recognized as a liability. That means your future lease payment should be a liability. If you are not recognizing them as a liability, your liability is understated. And then two more is there. Product warranties. Don't forget. How do you account for product warranties under what? Under IS 37. When you're selling the product, you're selling a 1-year assurance also with it. And this requires a type of provision. You recognize a provision for those kind of warranties according to IS 37. But currently, they can no longer undertake the warranty work itself. Okay. So even if they cannot take the warranty work, they can transfer this warranty obligations to another company rather than having it in-house. They can transfer it, but there's a risk of understatement of warranty provision. Now we'll talk about the extended warranties. Remember, they have a 3 and a 5 year, either 3 years or 5 years extended warranties. But this extended warranties, because you can purchase them and they're not given at the time of purchase, they come under IFRS 15. You need to know this. Extended warranties. Go to IFRS 15 and see what is extended warranties and how you deal with it. So IFRS 15 deals with extended warranties. What does IFRS 15 say? You recognize them as a contract liability and revenue recognized over a period of the service provided. That's what it says. Okay. So if the company is no longer planning to give them the warranty, what happens? Either you must make the refund or the contract must be sold to another provider. What happens? Let's see. If a refund is to be given, then you recognize a liability. If the contracts are sold to another provider, revenue should be recognized. Okay. Now, breach of the contract. This is another audit risk. Because since the company no longer has the means of fulfilling contract, what happens with the distributor? What happens? You have to recognize a provision. Provision should be made for any compensation or penalties arising. See, when you are not fulfilling a contract, what happens? Compensation needs to be paid, penalty needs to be paid. For that, you have to recognize a provision now. Okay. Where the penalty is due to distributors exceed the amounts due from them, the receivable should be written down. That means the penalty that you have to pay them is more than what they have to pay you. You write down the receivable. Okay. Because you have breached a contract, that's why you have to recognize a provision for it. But if suppliers do not exercise their right to invoke penalty, if they do not want to give the penalty, what happens? Then disclose it as a contingent liability rather than a provision. That is more appropriate. There's a risk that provisions are, in this case, are understated or contingent liabilities are not even disclosed. Okay. Now B, the extent that you can rely on analytical procedure and written representations for 5 marks. Let's say 3 for analytical and 2 for this one. Here you are given more points. You see the length of analytical procedure. You can just write any 3 points, 2 to 3 points. Okay. Please understand the nature. Here you are seizing. Okay. So do you think overall you can rely on analytical procedure? What is analytical procedure? It's like a trend or a ratio. Can you rely on it? No. It's less likely that you're going to rely on it compared to the prior year. Why? Because the scale as well as the nature of the activities changed compared to the previous year. You can rely on analytical procedure, remember, if activity was same, if the scale was same. Now it's changing, now they are seizing. So obviously the ratios, even if you calculate, will be very different. So overall, reliance cannot be so much. Now we'll explain. Specifically we'll go. Okay. If you go by the individually material transaction is more this year. Okay. So because in the current year there are individually material transactions, you cannot use an analytical procedure. You need detailed substantive testing. You can even give some of the material transaction like selling of technology. Then next is budget information. If you are using, see, analytical procedure, if you are carrying on based on the budget information, this year you cannot rely on it so much because you are seizing the trade. And when you are seizing the trade in the last year, previous year, you cannot forecast that this year you are going to seize. Understanding? So based on the previous year, the current year focus that you have made is based on the last year. Last year, your business was going well. It's doing good. It was continuing. So based on that, you budget, you focus the information. And based on that, you calculate some ratios. It's not going to work because this year is ceasing. You will only know that you are ceasing when information comes. 1 year before, you will not know. So here also it says you cannot rely on analytical procedure. Then we have more regarding information to compare. You can only compare this year's information with the previous year for only 10 months. Why? Because costs that is in June and July is relating to winding down operation. It is not your operational activity that you can compare with the previous year. So how many points you gave? I think almost 3. There are some more. We'll go through it, but if you just give this 3 is enough. 1, 2 and 3. Okay. But let's see the other 3 points also. This is regarding one-off circumstance. See, when you're ceasing, you're not ceasing every now and then. It's one time activity. Okay. So when you are assessing even the carrying amount, you are going to go through a detailed substantive testing rather than relying on ratios and past history. You cannot rely on past history because one of circumstance is just one of this time. You don't have a past to support. Now you can calculate ratios in that one. Ratios you can only calculate when something happens frequently. So this is the 4th point. 5th point. When you are doing AP, analytical procedure on your trade receivable, or you're calculating average collection period, what happens? They will not be relevant to assessing the adequacy of the write down now needed. Remember, you have to write down the inventory receivable. So when you're calculating ratios and all, they will not take this into account. The write down of the inventory, trade receivable. Even your inventory turnover ratios, if you have, you can no longer compare them. Why? Because there should be inventory for you to compare. But it says some reliance could be there, still placed on certain analytical procedure. For example, regarding charges to its statement of profit and loss for the 10 months of operation, will help you. Now, written representation. Here, compared to analytical procedure, written representation you can rely more actually. Okay. So overall, the extent is likely to be increased on written representation. Now let's see why. Why? Because this year you require more judgment and opinion compared to previous year. So you have to rely on the management more this year, especially on inventory and your receivable write downs and impairment losses and numerous provisions. All this area requires judgment. You cannot do a judgment without relying on the management. Okay. So here. So when amounts of assets have to be recovered, liabilities needs to be settled, management will be asked to make representation on the adequacy of this write down. How adequate is the write down? How adequate is the provision? How complete are the disclosure for claims or contingent liabilities? You need to ask the management. You need management's representation on this areas. Okay. And in some cases, management is the only source of evidence, especially when for negotiation and all. When nothing has been formalized yet, when things are going under negotiation. Next. So the extent to which you can rely on this representation depends on how well informed they are of some matters. Okay. Because if you see human resources not there, production directors will not be available after the financial year end. Right? So what happens because of this? And you need them. You need their representation regarding the areas of judgment before they leave. C. Audit procedure for amounts due from distributor. This is an easy one. 5 points. So five audit procedures you can write, but there is more than 5 in this case. I can say 6 is there. Okay. So if you see, as I told you before, you will see this word in audit procedure: review, review, recalculate, review, discuss, review. Okay. Think it is the amount due from distributor. What are the areas you need to check? You can review the after date cash to see whether payment has been received at the post year end or not. Then you can see the agreement with the distributor in order to see the penalties that are there and confirm the unexpired period up to 3 years. Third, recalculate the amount that is due from the distributor for the early termination of the agreement with them. If you recalculate the amount that is due, you can easily you can terminate. Then any correspondence with the distributor, review it regarding financial settlement and also responses that you have received. Then you can discuss with the management whether they can give you any further evidences or not regarding the due to be received from the distributor or penalties imposed. You can even review the board meetings for any discussion of the management relating to disputes with distributor. Okay. Now, D is again for I guess it's for 5 marks. Yes, low balling or low bailing. Okay. This is one, actions need to be taken is in a separate subheading because there are 2 requirements, and because this is briefing note, conclusion will be there. Okay, first we'll finish this thing. Low bailing. What is low bailing? First define. Low bailing means you are in order to win the tender, you are keeping low fees for your audit work. That is the meaning of low bailing. Okay. But you are going to compensate this low fees. How? By giving non-audit work such as consultancy or tax advice or anything like that. So now you are linking this to the case study. Okay. What Carrington and company has done, they has low billed on their tender. Okay. But there's a risk because of that. What is the risk? If your non-audit work does not materialize, if it's not so much, what happens? Then you may be under pressure to cut corners or to resort to irregular practices because you want to keep up. You have to compensate for your low fee. So if you're not even getting your non-audit work, what happens? You might either resort to irregular practice or you are under pressure to cut corners because you have charged low fee. This can affect the quality of the audit. Okay? Because you have to be kept within the budget. And if you are under the situation of negligence, then what happens? You will be guilty of not exercising professional competence and due care. This is an ethics. Remember, out of the 5 fundamental code of ethics for ACCA, this is one of it. So here you will get 1 mark itself. Next. Is it unethical? First understand this thing. Not everything is unethical. In this case, it's not unethical. Compared to other tendering firms, if you are quoting a lower fee for your work, it's not unethical. Provided that audit quality is not affected. Provided you are giving an appropriate auditor's report. Opinion is there. Correct opinion you are giving. Okay. So if this does not change, quality does not get affected, report is appropriate, audit fee is not an issue. Now, so the company may not just be low billing on the first year. They might go for the longer term like this in this fee. Okay. So if in future, in case they increase, it will be only to keep up with the inflation. Okay. And if the company was to later increase the audit fee, there will be a fee dispute. Okay. So in this event, they could refuse to pay the higher fee because from initially they were paying lower fee. So suddenly if they increase substantially, they might not accept to it. That's why this will be difficult then for them to take the matter to the court. They cannot go legal through legal ways. They cannot fight the case. Okay. Now they need to clearly communicate what type of service they can give for the fee that they are charging. Now actions to be taken. In this case, there are no actions. There are no actions that you can take to prevent them from awarding the tender. They can give the tender to whichever firm they choose. You have no action over there. It's not up to you. But Scarlett and company should consider its own policy of pricing in future competitive tendering situations. Now let's come to the conclusion. Conclusion is going to be similar what you have written. Okay. So regarding to the risk that you have discussed, there's a high risk engagement. And also audit risk relating to measurement and presentation of discontinued operations are significant. Out of all, the measurement and the presentation regarding discontinued is significant. All the significant issues you have to write in the conclusion, not all the risk. How are you going to address this risk? By designing audit procedure. You can use experienced audit staff to detect material misstatement. All these things are repeated. Even test understanding one had the same answer. But here one thing is extra. You have ceased the business. So due to the cessation of the business, what happens? You cannot rely on analytical procedure. This should be reduced. As for the reasons discussed. And regarding low balling issue, no actions needs to be taken by our firm. That's it. So now will we move on to test understanding 3. Test your understanding 3. So this question is also very similar to your question number 1 and 2. Okay. As you can see, this is also for 20 marks, 5 marks for professional skill marks. Similar to your first question. Here, you are supposed to respond to an email that you have got from an audit engagement partner. Okay. So in this, you are an audit manager. You see, every question has the same layout. So you will be given some role. Okay. Responsible of audit at this company, IVO. Planning to audit for the financial year end 30th September 2005. And you have been given 2 exhibit. First one is an email. Usually maybe you are given some requirements. Second one is a draft financial information. Okay. And we know the professional skill marks that will be tested. So now, exhibit 1 is not much to read about it. Okay. It is usually they are telling you that you need exhibit 2. Okay. To prepare briefing note. To evaluate the audit risk. You should use analytical procedure to help in identifying those audit risk. 2 things is required here. 1, evaluate audit risk. Second, use analytical procedure. Analytical procedure means nothing but ratios or trend. So for this, let's go to exhibit 2. You have been given the statement of profit and loss, both forecast and actual. Okay, wherever you can see notes, you have to go there and check. Then we have statement of financial position, as you can see. So there are 5 notes in total. So we are going to go through. So revenue, we have discounts as well here. Okay, then we have operating expenses, basically the breakdown of operating expenses. Then we have tangible assets, the 2 tangible assets, land and building, plant and machinery. You can see that disposal have taken place, then depreciation is there. Okay, buildings are depreciated over 50 years on a straight line basis. Plant and machinery is depreciated at 15 using reducing balance method. Now note 4 is about intangible, is the same. Any additions if it has taken place or deduction. Normally for intangible assets it's addition. Okay, because it's very rare that you're going to sell an intangible assets. It's very rare. Okay, Development costs are amortized over 5 years using straight line method. Then we have note 5, which is trade and other receivable. You can see that you have some allowances for credit losses. So this is quite simple. I have copy pasted the answer for you so that it does not waste so much of your time as well as my time in doing the calculation, because anyway you will be going through the answer, but my job is not to read one by one. Okay, you can see the answer. This is the answer. This is the length of the answer. Okay, I know most of you are panicking right now. Do not panic. My job is to break down this big chunk of information into small pieces and to present to you so that you can write on. So first I told you format is very important. Okay, you are supposed to do prepare briefing note. So that's what you're doing, briefing note. I have told in question number 1 and 2 the format. So by now it's there. To partner, from you, the audit manager. Date is already given there. Subject, audit risk. Okay, audit risk for this company. Now you have to write an introduction, 1 or 2 line. So what are you supposed to do? You are evaluating audit risk. That is the purpose of this briefing note for the company. Mention the name of the company and the what you are planning to do. Now, analytical procedure. Always first calculation, then write. Whenever you have to use calculation, need the help of calculation, first calculation, then you write. Okay, there are 2 types of calculation. Annual movement, this is the trend. Okay, to see whether something increased or decreased and by how much. The other one is ratio. If you see the answer, they have given all the ratios. Just see how many ratios they have given. But in your actual exam, you might not need all. You might just need 3 or 4. So do not try to give list of all the ratios that you know. All the profitability ratios, all the liquidity ratios, all the invest. No, that's not what you're supposed to do. But looking at the marks, looking at the information you are given, you have to make a wise decision what ratios will be helpful for you. Okay, but I will take you through all these ratios. Okay, if you see the annual movement also, because for your answer they have used, in fact most of them are used in the answer. So first we'll go through the calculation before we actually write. Okay, because you'll be doing this on a CB platform, you'll be doing this on the Excel, so things are very much easier for you. Okay, starting with revenue. So we'll start with our statement of profit and loss. Starting with revenue number 1, cost of sales. This all you know. Then all the cost, distribution. This you will get under notes. The breakdown of operating expenses, distribution, wages, director salary, rent, and other. Okay, you go here. Oh, sorry, it's this side. So you see here, revenue, cost of sales you have done, and under operating expenses go to note 2. You have almost got all. It's under note 2. So you have taken almost everything except the profit on disposal. This will leave it for time being. Okay, other than that all the expenses you are taking because it's a profit. Okay, other than this will deal when we take a building that we have disposed. Okay, so now I will show you for one and you can do for the others. Okay, so the formula is same. Annual movements, how much it has increased. I will show you for revenue. For the others you have to do it on your own. Okay, so revenue. Okay, if you have to see the change in revenue. Okay, you see revenue, how much this. So it is basically the difference between focused and actual. 12,570 minus 9,960 divide by the old one, that is this, because this is 2004. 9,960. Okay, this difference you have got here. What is the difference? It is 261, 2610, and you see here it's 9,960. So the difference is 2610 divided by 9,960, because this is the previous year 2004, into 100, and you got this. What is this? It's an increment or it decreased? It increased. How do you know that? Looking at the sign, it's positive sign here. I mean no sign, so it's positive. If it was negative, it would be shown inside the bracket. Something decreased, then it's a negative. Here revenue increased. You can see here clearly. I mean, see, it was 9960 and it increased to 12570. At least they have focused it that it will increase that much. So that's how you write it. Basically, you bring everything into in terms of percentage. Same for cost of sales, same for distribution, wages, rent, director's salary, rent, and other. When you go through all this, you have to go through the notes. I think it's under note 2. Okay, you will not get it from your statement of profit and loss. You have to go under the notes and check all the expenses and get it. And if you see from a snapshot, what I can understand is all the cost increased. Okay, but some cost increase more than the revenue. For example, distribution cost, if you take, this is 53, double of revenue. Even wages and salaries is slightly more than revenue. But our concern is rent. 191.7%. Such a big increase. Why? We'll see that later. That's what we have to answer. These are the areas of our audit risk. And if you see other, it reduced because it's negative. Now we'll move on to what? Just a minute. Okay. So this movement will only do for our profit and loss account, the income and the expenses only, not for our assets and liabilities. Okay. But when we do ratio analysis, we are taking statement of financial position as element also. Okay. For example, here. Okay. So first, you can see gross profit, operating profit, ROCE, asset turnover. This 4 are profitability ratio. The first 4. They are profitability ratio. They will measure your profit. So I will show you for 2005 only. For 2004, you can do on your own. Okay. Gross profit. So here you have this gross profit. So it will be 3014 divided by 12570. The revenue. They have shown here. They have shown the workings for you. Same for operating profit. Operating profit divided by revenue. Sales. But for return on capital employed, there is a star mark because this is operating profit divided by capital employed. That capital employed, how they got? Non-current plus current assets minus current liabilities. So go to your statement of financial position and do the calculation. You should get this 4094. Okay. Asset turnover. Asset turnover is your revenue. See, asset turnover, your sales of 2005 divided by your capital employed, that is 4094. You see, same capital employed, 4094, 4094. So as sales divided by capital employed, that is asset turnover. That's why you should memorize, you should know all the formula. Otherwise, you will not be able to do the calculation. For that reason, moving on to the next, current ratio. So current ratio is your current assets over current liabilities. From your statement of financial position, you can take the total. When you're taking asset test, you deduct your stocks, inventory from your current assets. Liabilities remain same. Inventory holding period. Remember, it's a period. Whenever it's period, you need to multiply it by 365. Here also collection period. Here also payable period. So multiply by 365, multiply by 365. But what are you taking for the fraction? If it's inventory, okay, we are going to take inventory divided by cost of sales. So you need to go to your statement of financial position. Okay, this one is the inventory. Inventory divided by cost of sales, which is 95560. You have to take cost of sales. This, you see. And when you are taking receivable, it is your receivable divided by sales. Here it is your payable divided by cost of sales. Why? Because you are not being given the purchases. When purchases are not given, you take cost of sales and multiply it with 365. Same way you have to do it for 2004. Just the figures change. Now, let's compare. If you see gross profit, you have to go like this and check from left to right. Sorry, from right to left to see. Gross profit slightly increased. Operating profit slightly increased. ROC is slightly increased. Asset turnover, it went little down slightly, not much change. current ratio was good before also. Now it's more current asset is there. Then asset test before it was not so good because it was 0.8 is to 1. Current asset was less than current liability. Now it's better. It's 2.3. Inventory increased from 58 to 63 days, which is not so good. Receivable increased from 51 to 65. Again, not a good sign. That means customers are delaying in paying you. Payable is also reducing from 72 to 28. Okay, that means you are paying your creditors very early. Okay, which is both good and bad. So now with that, for risk evaluation, we'll start one by one. Best thing always, the most safest side, and if you see most of the answer, they always start with the revenue because it is the easiest and it has the biggest chunk. Most of the manipulation, everything comes in this revenue recognition thing. That's why auditors pay very careful attention to revenue, especially compared to other things. So we'll start with revenue. That will be our first subheading. By the way, what was the number of marks for this question? It's 20 marks. Okay, some of it will go for calculation. Okay, at least half a mark for each calculation. So the balance will go for writing. Okay. Well, let me check how many risks are there. 1, 2, 3. Okay, so there are 7 audit risks that they have mentioned. Okay, so answer as I told you, use this rule. 20 is there, right? 20 marks. Divide this by 2. Don't take professional skill marks when you're taking only technical marks. 20 divide by 2. This method I've used in question number 1 and 2 also. In fact, in any question in your ACCA, you can use it. It's 10. Okay, so I always tell use more than 10 or 11 points. 10, 11 points you can use. 10 or 11 points or 11 risk you can mention. But since you are doing calculation here, you can reduce it. You can write 8, 7 or 9 risks. In this case, they have wrote 7. Okay, let's say with calculation and conclusion and everything, marks are there. So let's say 7. Okay. So revenue. Okay. So first, always say whether something increased or decreased. In any risk, this I've taught in question number 1 also. I told you, be very consistent with your answer. Once you know the format of one thing, it becomes very easy. You replicate it in the other risks also. That's why I say AAA is not so difficult as you used to think. The reason why it is difficult is because you are looking at the quantity of the answer. Okay, you start panicking and you have assumed it. Before you actually start doing it, that audit is tough. I'm going to fail audit. Everyone keeps failing audit. So I have to keep on giving try. It's not like that. Change your perspective and things really changes. Okay. In fact, triple is very easy because a lot of answers are there typed, consistent, and it's very consistent. The only thing is you have to figure it out, and no one was there to point out or show you that thing. Okay. Especially my videos will be helpful for those students who are doing self-study for AAA, because I normally don't suggest self-study for AAA if you are new to ACCA. I mean, if it's your first paper in ACCA, if you have done audit before, at least you have some understanding. But it's always good to study under a tutor because you need to know even if you write where you are going. Okay. So anyway, coming back to my answer. So revenue increased by 26%. Now you know because you have done the table before. Okay. And if you see 26%, you have to comment. Always comment whether something is significant or insignificant. Most of the time you will see it's significant. That's why it's there. So you have to say it's a significant increase. That's why it's a reason for you to worry. Okay, then you say convert this into risk, convert revenue into risks. How? By saying risk that revenue could be overstated. Obviously, everyone wants to overstate the revenue. Who wants to understate revenue? A fool might want to do it. I mean, come on. Anyway, so next, remember, you have professional skill marks. Don't forget that while you're writing. So how are you going to get this professional skill marks? By applying. See, communicate. I will take you through professional skill marks. Okay. Keep this in mind for any question, by the way. Okay. This is through one question I'm showing you. But wait, it's up. Okay, here. So communication skill you are fulfilling because you are writing it in a briefing note. When you're writing this in a briefing note with subheading, introduction, conclusion, you are anyway fulfilling communication skill. So you don't have to worry about it. Automatically, you are getting that mark. Okay. Then coming to analysis and evaluation, they are one thing. In your SBL, these two skills are different, but here it's same. Okay. Evaluation means you are giving 2-3 reasons. Under one point, you are explaining it from various angles, or you are giving pros and cons. So it's like pros and cons of something, or from various angle, financial, non-financial aspect, you are talking about something. That is the meaning of analysis evaluation. And here you also have to show how well you have used your exhibits, how you have connected exhibits. They're interconnected with each other. Then comes your professional skepticism, where you're challenging. If something is there, you're doubting the management. Then comes commercial acumen. This is a little difficult one, is this one, commercial acumen. Here, this means how well you have an understanding of something. If you are more knowledgeable about some aspect or some industry, you have an advantage to get the skill. Because as a student, if you're not working, you might not know so much of the things which a person who is working and doing a paper will know. So they have an advantage over you. But that does not mean that you cannot get the skills. You can keep reading technical articles, keep reading more on it. Okay, and if you're not able to do anyway, it's fine. But see, so here what they have done is they have used commercial acumen. How? In this one, they have used commercial acumen here in this area. So they are giving reason. What is it? They are saying, basically this is a reason paragraph. Why that increase? We are saying it increased. It could be also about why. Because of heavy discount. Because of heavy discount. Yes, when discount increases heavily, why not sales? So you see, you are using commercial acumen here. That means you are showing your knowledge here. This is how you are gaining the marks for commercial acumen automatically. And you are using it from where? How are you saying it's 4% and 2% in the previous year? Discount before was 2%, now it's 4%. How? There's a table given to you, note 1. Go under note 1. And while you are doing from shifting from one note to one note, or statement of financial position to statement of profit and loss, you have to be very quick. That's why I always say keep practicing questions. Every question you do, time yourself that you are under the exam condition and then do it, because that will bring you stress and you will know yourself how well can you perform under the stress. Because with time, you are taking ample amount of time, anyone can do it. Or if you're looking the answer, that's another story. I don't want to talk about it. Okay, but you need to stress yourself to see how far you can pull yourself. Anyway, coming back to it, you see discount here. So what are you going to say? Just say this, just take the discount over the sales, 200 over 10, 160, and take this over the sales and find out. This will be around 3 point something. Sorry, it will be around 1.9 or something. So let's take 2%. This will be, if you are taking maybe 3 point something or 4 point something. So whole number is 4%. So you see discount is higher this year compared to before year. So because you are given that table, you can perform the calculation. When you are in that position, do it so. If no numbers is there, nothing to worry. But when numbers are there, calculate. Like how they have done. They have got this 4% and 2%. This itself shows that you have a commercial acumen. How? You are saying, you are giving a reason that revenue could be increased because of heavy discount. Okay. Same pattern you have to use for the other risk also. You first say something increase or decrease, then you give reason. Second paragraph. Third paragraph. See, revenue. Okay. You can link revenue with something. You have done some ratios. Remember, they told to make, you have to use this ratio analysis or analytical procedure. I mean, annual movements. Because the requirement tells you so. You need the support of analytical procedure. Either the ratio or either the analytical movement. Okay, analytical movement you have, sorry, annual movement you have done by saying discount is higher this year. What about ratio? Which ratio can you link with the sales? It is receivable collection period. This is going to help you a lot. So you can use this 65 days and 51 days in your answer, because it is credit sales divided receivable. So receivable over credit sales. Okay. So here, if you see, it increased. What does it mean? You are extending credit terms. That's why receivable collection period is becoming more and more. Okay. So now revenue, which standard deals with revenue? You have to talk about standard, IFRS 15. So IFRS 15 says revenue should be recognized when consideration, you are expected to receive that consideration. Okay. So in this case, what should be your sales? Revenue should be recognized net of discount. After you deduct the discount, you have to recognize the revenue. So then finally you say the risk, because it's an audit risk. Risk means something is understated or overstated. You basically have to talk risk like this also, whether it is overstated or understated. In everything. So in this case, it may be overstated. What is the risk? Risk is that revenue may be overstated. You might write gross of discount. Maybe without deducting discount, you might recognize revenue. It's possible. That's why maybe revenue increased. So now we finished revenue. Now you know how to answer disposal of building. Second, okay, before coming to disposal of building, then think about other risks in your mind. Okay, see, whenever you have to think about risk, go to notes. Your notes is the starting point. It will help you to identify risk. For example, here we used note 1, looking at discount. Go to note 2. Note 2 is basically expenses. Okay, then we have tangible asset. Okay, so since we went to tangible asset, you can see land and building, only land and building. Plant and machinery is nothing. You see, disposal took place here for land and building. You have to question why you disposed. That was a 1.1 million worth of land and buildings you have disposed. It's a huge amount. So that could be another audit risk. You see, this is how you bring out audit risk. It's not straightforwardly, you will not get everything on a silver plate. Okay, everything will not be fed to you on a silver spoon with a plate. No, you have to dig like this and find out the risk, bring out the audit risk. It's not straightforward from your scenario that this is audit risk, this is audit risk. So disposal of building is the second one. You can basically list it in any order, but anyway, this also will come later on, right? You can talk about expenses also. Any order you can write, doesn't matter. But it's good if you write the risk which is the most material first, because then you will get your professional marks also. For communication skills you will get. Here, see, during the year, you have to understand. First, you have to find the carrying amount of the building and at what you have sold it. Okay. So the carrying amount is this. Go to note 3. Only look at the disposal, not the cost, brought forward balance in the cost. Okay. So your disposal cost is 1.1 million. Okay. And you have to take out the depreciation. That means disposal depreciation. That is 110. So deduct 110 from this. That will be your cost. But at what price did you sold it for? You have to go to your operating to. You see, you have made a profit on disposal on this date. On this date, you have made a profit. Obviously, you must have sold above your carrying amount. That's why you got this profit. So add that profit to this amount. 1100 minus 110. That is the amount you have sold it for. Not understanding? Anyway, let's come back here. So this is the amount that you have disposed, cost of disposal, and depreciation, you have taken it out. So this is your cost, carrying amount that you have disposed. At what? This you take here, add the profit, 510. That means you have sold it for this much. In other words, take it like this. You have this much worth of building you have disposed. For how much? This much. So if you take the difference between this two, you should get 510. That's the profit. That's why we are adding back the profit to get this amount. At how much we have sold it. If you have sold it at this much only, you can have 510,000 of worth of profit. Okay, that's why you're adding profit to the cost to find the amount that you have sold it, which is 1.5 million. Okay, remember, this is building. Okay, so on buildings only you have rent. You have two types of assets here, right? Intangible, under tangible, plant and machinery, buildings. Plant and machinery will not give you rent. It is only buildings that will give you rent. So you can compare this with your rent. Remember rent? We told rent increased 192% something from here. Where was it? Here. This 192% rent increased. Link this rent to this building. I know it's a little bit too much for you. You might not be able to bring everything at first. That's why you have to practice more and more questions. The more and more practice you become, more experienced also you become. Okay, how to link this with that and this with this. So it increased by 192% rent, and you have sold it off. So is something coming to your mind? You have sold it off and then rent also increased so much. It appears that company is going for a sale and lease back. You have sold it, maybe after that you have taken it on lease. That's why you have to pay rent now. That's why rental expense could be. Okay. Why? Why are you thinking sale and lease back only? Why not any other way? See, you are sold, having sold so much, that means half of the building you have sold. At least if you are selling half or more of it, it's unlikely that company can increase their production so much by selling half of its building. You have not, how much they have sold? I think they have not given there. So you see at least half. Even from here you can understand. 2004 balance was this much, but 2005 it increased half of it. Even less than half of it. Half of it would be 900. So it's 792. So looking at the carrying amount, you can understand so much you have sold. More than half of it is sold. So it's unlikely that with that level you can produce so much. So chances are it could be sale and lease back. Which standard talks about sale and lease back? Which standard? Hit that standard, IFRS 16, leases. IFRS 16. If you don't know the rules of IFRS 16, especially for sale and lease back, you can go back, watch my lecture from SBR lecture, that is IFRS 16 leases. I have explained it in detail. Okay. Now, two things you have to do when it's sale and lease back. First, find whether it's sale or not a sale. Because if it's a sale, you de-recognize the asset and all. It's easy. If it's not a sale, then IFRS 16 leases rule apply. Okay, so if the sale is not a genuine sale, what happens? Still, you can continue to recognize the building. The company will still recognize the building. Okay, they will recognize, and a financial liability also equal to the proceeds that they have received, because this is a sale and lease back. You have to go through my IFRS 16 to understand why financial liability and all those things we are recognizing. But if you are very thorough with IFRS 16, you know, you don't have to go back and watch. You will know it. You will understand what I'm saying. That's why as an auditor, you have to know your SBR very well. Next, profit. There was a profit on disposal. Because we are still in the building, so we have to talk about the profit also on that disposal. If you see profit is there in the statement of profit and loss, right? So because there's a profit, it would appear that they have treated this as a sale and lease back as a full disposal. That means not, and you are not saying that partially you have kept something and you are partially disposing. No, you have entirely disposed because you have got a profit on that disposal. Profit is recognized. So that's why it is sale and lease back as a full disposal. But if it's not so, if it's not a full disposal, remember, profit on disposal could be overstated. Okay, but we don't care whether something is full disposal or not. It's not going to impact our accounting. So whether sale and leaseback is a full disposal or not, you have to recognize leased assets now. Okay, leased assets you will recognize under your non-current asset, that is PPE. Okay, IS 60 talks about property, plant and equipment. So lease asset you will recognize But there is a way. Lease asset could be recognized as PPE if still controlled by the entity. But if it is controlled by the lessor, then right of use asset. We all know. Because then you become the lessee. Okay, you have taken it on lease from someone, lessor is controlling. You are just taking it on a lease and just using the asset, then right of use asset. But if you as a lessee, if that asset is given to you, you have the control, then that lease asset you recognize as a property, plant and equipment, as a non-current asset, because you have taken control over it. So it depends. In the exam, clearly they will tell you who has the control. Okay, whether it's right of use asset, whether it's property, plant and equipment, you have to depreciate. You have to depreciate over what life? Useful life, if entity is controlling. But if it's lessor, then lease term, then depreciate over lease term. Because you are recognizing an asset, on the other hand, liability also you should recognize. So now comes your terms under IFRS 16, right of use asset and lease liability. Okay, they may be understated in this case. Why? Because if you see a statement of financial position, they have not mentioned right of use asset or lease liability. It's not there. So this could be understated. Okay. Now, so that's the second one. Then we have development cost. That is our next audit risk. Okay, you have to go to development cost. That comes for intangible. If you see, it is 54 development cost this year. Okay, so it's for 54,000. And if you take this out of your total assets, go to your statement of financial position and take your total assets. Okay, 54,000 divided by your total asset. You will see is 1%. Development cost is 1%. So it's material. Which standard deals with development cost? IS 38. Use the IFRS standard. Okay, what does IS 38 says about development cost? That you can capitalize it. You can recognize it as an intangible asset only when development is technologically feasible. Entity intends to complete the development and they have the resource to complete the development. Otherwise, you can't capitalize it. Okay, and here they are amortizing it also. So development assets must be amortized. In this case, amortization period is 5 years. But in this case, it may not be the expected life of the product. Maybe the expected life of the product might not be 5 years. Therefore, this is inappropriate. This may be inappropriate, that 5 years. So what could be the risk? Risk of overstatement of development costs. Maybe you have overstated. Okay. Especially if the recognition criteria is not met and you're recognizing. Okay. You might even have to see the amortization charge. Maybe that is not appropriate. Now, next is inventory. Okay. So inventory, if you talk, you have to take inventory of 2005 and check it with total asset. Inventory of 2005 divided by total asset. Total asset means both your current and non-current assets. Okay. In your statement of financial position, you already given the total asset. So you will be getting 32%. This is material and therefore significant risk. So if you see inventory is increasing, right? It's not good. That's why we are mentioning it as a risk. And here IS2 applies with inventory. IS says lower of cost on net realizable value. Okay. And also discount offered must be taken into account when determining net realizable value. Okay. Now, as the new inventory increased from 58 to 63 days, you have done ratios, right? So it increased. It's a risk of overvaluation of inventory. Maybe if overvalue the inventory. Next is receivable. That's another risk because that also increased. From our calculation, we know what are the things we have to put. Okay. So receivable. Remember, receivable increased. So you see your sales increased. Okay. With that, even your uh, discounts also increased. Okay. Okay. Sorry. Credit sales increase coupled with greater credit period. You see, you are giving a greater period. If you see the receivable collection period, they are now taking more time to pay. So with the increase in credit sales, plus they're taking more time to pay, those credit period is a risk. Increases the risk of irrecoverable receivable. Both together increases your risk of irrecoverable receivable because it is a credit sale that is increasing. If it was cash sales, fine. And also credit period is also increasing with that credit sales. Both are risky. Even the allowance for receivable has not been adjusted. If you see how, it's still 70,000. Go to my receivable. You see, it is 70 and 70. It's in thousands. So 70,000 and 70,000. So they have not adjusted. Whereas trade receivable increased, but credit losses is 70,000 only. So if you take this 70,000 out of your sales, okay, it's 5%. I mean out of your receivable, 5%. And if you're taking it for this year, it's 3% this year. So 5% of total receivable last year and only 3% of receivable this year. Receivable collection also increased. You can mention that also as well. Which standard is with receivable? IFRS 9 because it's a financial asset. Here they say whatever your transaction price less any allowance for expected credit loss. You measure your receivable at that. That's why you might not have adjusted expected credit loss. It shows overstatement. Maybe trade receivable you have overstated because you did not increase your credit loss. Remember it was 70,000 earlier, now also 70,000. Even the revenue increased. That's why we are talking about the risk. Next is going concern. This labels and all going concern. Did you see anywhere in the text study? I mean in the case study? In the scenario given to you in the question? No. How did you find it? It's going concern issue could be there. Looking at the ratio. Check. If you see asset test, it's 0.8 and it became 2.3. If you see the building, they're selling more than half of it. Even receivable is increasing while payable period is reducing. That means you are paying early, then you are receiving, which is again is not a good sign. So all this leads to going concern. You have to be wise enough to pick the correct word. Going concern. Okay. So yes, in terms of liquidity, improvement is there. There is an improvement. Both for asset test and the working ratio. Improvement is there. But remember, we are told to evaluate the risk. So we have to talk about the drawbacks also. Okay. If you see significant amount of cash, how did they raise? Through disposal of building. 1.5 billion they have got it from the disposal. They have also issued new shares through which they have got another 700,000. That means total of 2.2 million. So, and it appears that this has been used to pay off the external, significant external debt. Maybe through this, they might have paid their external debt, especially bank loan and trade payables. How did they get 700K? So you go to your statement of financial position. You see here, it was 1,000, now it's 1,700. So we know 700 shares has been issued. So you add that with amount that you have raised from disposal. So if you give your pay for external debt, you'll be left with very little that you can use in the business. Very little cash. Okay. And if you go by trading cash balance, it's very difficult to generate. How? Looking at the cycle, you can say. How? Inventory and receivable both increased, which is not a good sign. Whereas even your payable increased, payable reduced. Payable reducing means you're paying early, but you're receiving very late. So that means you're not having enough cash at the hand. Okay. That's why. Next. So the inability to generate cash balance. You are giving all the reasons that a going concern could happen. So if you are unable to generate cash balance like this, what happens? Like through your trading, through your working capital. I mean, you are not able to manage your working capital well. And that's why you're not generating cash like this. What happens? Company is unable to meet its loan or lease repayment. Remember, you have a lease of a building that also you have to repay. Compulsory loan also. So you're unable to do this. So if you have failed to pay trade payables, okay, it could lead to a loss of supplier goodwill, and also future trade relationships are going to get impaired. So if the business is going to face this uncertainties for going concern, what should they do? Disclose these uncertainties. That's why there's a risk of material misstatement if any going concern issues are not adequately disclosed. You have to disclose. Okay. Next is distribution cost. This also from the table I told it increased double of the revenue, which is not a good thing. Give reasons why it could be. Maybe geographical spread of customer. You're geographically spreading it to the customer over a wide geography because you have to travel, no? So distribution cost will increase when you have to go from one region to another. Also, fuel cost might increase, which might increase your distribution cost, as well as misallocation of expenses. Maybe capital expenditure, you have put it under revenue expenditure, like that. Remember, this is a briefing note. So that's it. We have covered all the risk. We have evaluated using our analytical procedure. Now comes conclusion. Not more than 3 to 4 lines. So what did we do? We can say that it's a high risk engagement. Same like our question 1 and 2 after evaluation the audit. Next, we have to include audit procedure to deal with those risks. Then you have to select the audit team with relevant skills to address those risks. That's it. If you see conclusion and introduction are very similar almost all the time. Only the risk changes. But the way you explain each risk, making it into different subheadings with different paragraphs is the same. Okay. Now we'll be moving on to test understanding for the last question. Test understanding 4 is a very simple question for 8 marks. No professional skill. You have been given 4 different scenarios and you have to identify business risk as well as the audit risk. Okay. Now we'll go through each. First one is about computer game industry. Here you are developing new games for sale in the retail store. We'll finish one by one first rather than reading all the 4. Okay. So it's about game industry. What could be the audit risk? Think about game. First think about business risk, then think about the audit risk. Okay. First, always identify the risk. The risk is it's in the rapidly changing industry. Game industry changes very rapidly. Same it's repeated in audit risk also, but the explanation is different. When it comes to business risk, okay, remember as company, okay, if you are into that company, you need to constantly keep up with the pace of change. That means you have to come up with new product development. And if you are not able to do that, what happens? Competitors will come up, right? You might struggle to keep up with the competitor if you're not investing enough in your product development. As a result, see, business risk always you have to link it to revenue and profit or cash flow also. In this case, it's revenue and profit. So if you're not able to keep up with your customer, competitor, what's happening? You're losing your customer. Losing your customer means losing sales. So loss of revenue and profit. Next, So the business risk could be, you should always link the business risk to loss of revenue or profit. Are you losing revenue? Are you losing profit? If yes, yes, it's a business risk. Coming to audit risk, from the auditor's point of view, what happens? Going concern issue. If you are not investing enough in the product, it could lead to going concern issue. Okay. And also, if any unsold products are no longer in demand, what happens? Because you are not keep coming up with product development. So what happens with your obsolete product? You are not able to sell them. What happens? You have to write it down to lower of cost or net realizable value. The inventory that you have of games under IS2, lower of cost and net realizable value. If this is not done, what happens? Inventory will be overstated. So when it comes to audit risk, it's about understatement, overstatement. Remember that. Business risk, loss of revenue and profit. Audit risk, understatement, overstatement. Something, whatever the item is. Here is inventory. So inventory will be overstated if you're not writing down to the lower of cost and NRV. Coming to the next company, that is Portmore. We'll read it. Here, they are waiting for a confirmation from the bank. Bank is going to confirm that they are going to extend the overdraft for them. So auditor are required. So bank is require a copy of audit financial statement. So from the point of a business think, first they have identified the risk. This is from requirement, okay? They're just copy pasting it. Same things like here. Just copy pasting from the requirement. Once that is there, tell the risk. Cash flow issue will there. I told you, either with cash flow, with revenue or profit. So here it has to do with the cash flow. What? Imagine if the bank fails to extend the overdraft facility, you are going to have cash flow problem. Then you need more financing, more expensive financing from someone else. So if you go on like this, going concern issue will come. I mean, going concern issue is an audit risk, but you can understand it's also a business risk because you're not going to achieve any of a business objective. Anything that hinders you from achieving your business objective is a business risk. And from the auditor's point of view, how this could be an audit risk? Tell. Because you need an overdraft, right? So to the bank, you are under pressure. The directors are under pressure to present financial statement in the best light. So because you are in that position, what happens? Materially misstate. You can materially misstate the financial statement because you can easily manipulate them. Especially on those areas where management judgments are required because it is subjective. It's hard to verify. Evidences are hard. So because of this, what happens? If bank does not confirm, there will be material uncertainty relating to going concern. Now, third company. Montage has recently started selling its product overseas, so we can understand the risk with overseas. One is foreign currency risk is there. Okay, foreign currency risk is there. Adverse foreign currency first. Second, because it's in the foreign market, what happens? Maybe you have overestimated the viability of the market. Maybe the market might not be so viable, but you overestimated it. Okay, your new venture might not even be successful also. So because of this, your revenue would be lower, profit would be lower than expected. Business risk. Audit risk is there could be error when you're translating to the foreign currency transaction. When you're translating foreign currency transactions, error could be there. Second, revaluation of the year-end balances may not even be performed also. So because of this, there could be misstatement of receivable, payable, and cash. Receivable because if it's from the customer that you have to get. Payable if you have to pay, and both of them ultimately cash. Okay. Here, see, going concern is unlikely to be a business case, right? Unless the new market presents a substantial portion of their total business. In this case, we are not talking about going concern issue for this, okay? It is unlikely to be a business as well as an audit risk. If you're thinking of audit going concern, why? Because this is just an expansion. If they entirely, like if the major market was in the overseas, then going concern makes sense. But even if that market does not perform well, you still have the support of your local market. That's why going concern was not mentioned here. It is just an expansion. Fourth, you have negotiated a contract with a new supplier for all of its raw material. So it's just you are relying on one supplier. That's a risk. Okay. So your new supplier could deliver you poor quality, might not even deliver on time also. If they do so, manufacturing process will be disrupted and they'll be delaying in supplying customer. So because of this, what happens? Customer will complain, customer goodwill you will lose, hence revenue will lose. You will lose revenue. Audit risk is, okay, so this is just copy paste. You see, this points are copy paste. What happens? Selling price. See, in order to achieve that poor quality, they may require selling price to be reduced. And when selling price is reduced means NRVs will be lower than the cost. So inventory will be overstated here. If you're not valuing inventory properly, you will be overstating. Okay. Here also same thing. Complaints and delays, all this will come. Okay. So because of complaint and delay, what happens? May result in customer cancelling the order, requiring refund. Customer may go for a refund. So you have to then give a provision for this refund. So this provision for this refund may be understated if not made adequately. You might understate it, right? So that's an audit risk. Anything understatement, overstatement in your statement of financial opposition or income statement is an audit risk. So that's it. We have covered all the 4 questions. Please go through them, and more questions like that, similar questions you will get in your revision kit. I will definitely do revision kit, but after I complete all my AAA lecture. So don't forget to subscribe to my channel if you haven't, and please, I request all of you to share this video with your friends who have not subscribed to my channel or who are unaware, who might, who is just waiting for a right tutor or right lecture or the tips and techniques to pass AAA. It would be a big help for them as well as for you. Okay, and I shall see you in the next lecture. Till then, take care.